Good afternoon, ladies and gentlemen, and welcome to the GoIPO Nasdaq Seminar 2025 here at Coex. My name is Thomas E., CEO of CBA Partners, and I have the privilege of serving as your moderator today. On behalf of CBA Partners and our co-host, HeartCore Enterprises Inc., I want to warmly thank each of you for being here today. Your participation is what makes this seminar meaningful, and I look forward to an insightful and inspiring afternoon together. Today's event represents a pivotal milestone, making the beginning of a new chapter for South Korean enterprises seeking access to international capital markets, with particular reference to Nasdaq. This occasion underscores the growing ambition of Korean companies to expand their global footprint through U.S. listings. Allow me to begin with some perspective on the global IPO landscape. Since 2014, nearly 280 Chinese companies have been listed on U.S. exchanges, including NYSE and Nasdaq. From Japan, approximately 40 companies are currently listed in the U.S. And perhaps with active support of HeartCore, this number is expected to grow to 100 in the coming years. For Korea, the current number of US listed companies stands at approximately 15, but the momentum is steadily building. Through the combined efforts of CBA Partners and HeartCore, it is foreseeable that by 2030, more than 50 South Korean enterprises will actively pursue listings on US exchanges. It is my personal aspiration and honor to one day celebrate and recognize the 50th Korean company's IPO on Nasdaq. This seminar is designed to share practical insights into the US IPO market, the legal and accounting frameworks, and IR strategy, all critical to any company considering a Nasdaq listing. We are privileged to have distinguished speakers from the US, Japan, and Korea, each bringing unique expertise. Without any doubt, I can assure you that each of the speakers here today represents the core members of the task force required to take a South Korean companies public on Nasdaq. Should such a mandate be requested at this very moment. Before we begin, I would like to take a moment to introduce all of our distinguished speakers for today. Each of them will have their own session later in the program, but I want you to know who is with us from the start, so you can also connect with them during breaks and after the seminar. Ladies and gentlemen, may I now invite you to join me in extending to them a most warm and dignified round of applause. On my left, I would like to introduce Mr. Sumitaka Kano, CEO and founder of HeartCore Enterprises Inc. Next to him, Mr. Dishampini, partner at HTFL LLC. Again, next to his right, Mr. Hee Gang Shin, partner at BKL LLC. On behalf of the Borrell, unfortunately, Mr. David Borrell could not make for his personal reason. We have two guest speakers, Stephanie Hugh and David Lee. And they'll be sharing the presentation 50-50, okay? Just so they will jointly present the presentation material of the Borrell. Okay, and then next is Miss Wendy Hamilton from US, Principal of Global Capital Market, BDO US. And Mr. John E., Managing Director at Gateway Group. And finally, Ms. Inez Chu, Director, Active Disclosure at Donnelly Financial Solutions. They have put a lot of hours until today preparing the presentation material, and I hope their past information will become as fruitful and as result-oriented for today. We are very grateful to have such an accomplished group of experts with us today. Please feel free to approach them during the breaks for further discussions. Today's session will run until 6 p.m. with short intermission along the way. Also tomorrow, September 17, we'll also host one-on-one meeting with HeartCore, the underwriter, for companies wishing to explore the next steps. With that in mind, let us begin our program. Our first keynote will set the stage by examining current trends and strategies in the US IPO market. Please welcome Mr. Sumitaka Kano, CEO and founder of HeartCore Enterprise, Inc.
Thank you for joining today's seminar. I'm Sumitaka Kano. I'm CEO of HeartCore Enterprise, Inc. So I'm very honored to speak you today. It doesn't. Thank you. Okay, so let's get started. So here is my background. I'm Japanese. I'm very
good. Two mic.
Okay. Two mic? Oh, okay.
Okay.
Okay. I'm sorry. So my background is very unique. When I junior high school, I start to make a computer by myself. I use 8080 from Intel. That was very tiny venture company at that time. So I'm many experience about this area. And once I graduate my university, I became a pilot because of Tom Cruise. Unfortunately or fortunately, I watched a Top Gun movie, the first one, in my university. That was amazing one. So I want to be a pilot. So I joined and I became a pilot. After that, I make a big boom in snowboard in Japan. And I established my own company, HeartCore. And when in 2021, I decided to become public in Nasdaq. Because in Japanese stock exchange rule, it's very strict and it's very, it's not unique, but it takes a long time. So I decided to become a public company in Nasdaq in 2021. At that time, only one Japanese company listed in Nasdaq. However, over 200 Chinese companies get listed in Nasdaq in the same time. What's a big difference? Because of the information. There are many fake news. So somebody told me it takes more than 2 years. No, actually less than 1 year. And another guy told me it cost 5 million to 7 million US. It's crazy amount. It's almost impossible to invest 5 to 7 million just for the IPO. So nobody wants to become public in Nasdaq from Japan. However, the accurate information is quite different. That's why I decided to write a book. This is how to become Nasdaq, even a tiny company. So this is a bestseller in Amazon Japan. And so I create big boom, Nasdaq public boom in Japan. Before we get listed in Nasdaq, only one Japanese company. But now, roughly about 20 companies listed in Nasdaq, and we expect another 30 companies, Japanese company, try to get listed in Nasdaq. So I'm honored to create Nasdaq boom in Japan. So I live in San Francisco Bay Area at this moment. So this is a Korean IPO number. Unfortunately, not so big number, only average it's 80 annually. Only 80 companies can get listed in Korea Stock Exchange. However, this is a Nasdaq and NYSE. In 2021, this is a big number. Only in Nasdaq, 753 companies listed in Nasdaq in 2021, and NYSE 273, including a SPAC company. However, it's a big number. The totally over 1,000 companies can get listed. Okay, and the getting down, significant get down in 2022 and 2023. However, it's less than 200 company can become public in Nasdaq and NYSE. So what the comparison, Korean stock exchange market and US stock exchange market is a significant difference between these markets. And also, it's raising capital. It's also a big difference because this is a Korean stock exchange market. So there are 3 different categories. And then NYSE Nasdaq has couple different categories. For example, Nasdaq has global select market, global, and capital market. However, the big difference is only one market. The 3 different criteria. However, only one market Nasdaq has. The very healthy rules they have, because if the company, for example, it's out of the criteria for listing, for example, below to $1 share price, so go to OTC market automatically and keep to trade. So there are no bad things for the shareholders. So and finally go to pink seat, still on public, but it's a tiny cap table. So however, it's on still public. So that is a big change between big difference between the Korean and US stock exchange. Okay, and when you decide to become public in Korea stock exchange, it takes a minimum 2 to 3 years. That is a minimum. It's a very, very long way. So this is almost same in Japan. It takes more than 3 years in Japan. It's a very, very tough work. It's however, in US, this is Korean. This is N4, N3, N2, start N2 and N-1 application. However, this is a US stock exchange. So when you decide to become Nasdaq or NYSE, it takes minimum 6 months. 6 months. It's a half year. It's very, very quick. However, typically it takes 9 months or 1 year. However, this is ideal. It's 6 months. And you need to engage with underwriter and lawyers and also auditors. That is a minimum requirement. So today we have all specialists. So this is the US stock exchange. Once you decide to become public in US stock exchange, you select underwriter, the legal counsel, and the auditors. And also create a proposal that is F1 or S1 registration statement and filing to SEC and get approval from SEC, FINRA, and Nasdaq. Finally, you become a public in Nasdaq or NYSE. So you need to get a 2 years audit. However, typically it takes 3 to 4 months. That is a minimum requirement. So 2 years audit, it takes only 3 or 4 months. It's very quick. So this is a comparison in Japan, United States, and Korea. Korea and Japan are almost same, more than 2 years. In Korea, requirement is 3 fiscal years. However, it's 2 years in Japan, US. They also underwriter review and SEC confirmation and Nasdaq confirmation, US stock exchange required. They take 6 to 9 months. And you can raise 20 million to, this is a long number, I'm sorry, this is a typo. 20 million to 30 million US, you can raise money. It's an average. And in Korea, it's about 4 million to 10 US, 10 million US. So it's a big difference. So this is a breakdown of how difference between the US and Korean market. Okay, so and this is a Japanese Tokyo Stock Exchange number. This is Nasdaq number and NYSE number. Totally 5,000 in Nasdaq and NYSE. However, there are many stock market in United States, include the OTC and the legal market, regional market. I'm sorry, regional market in US. So and the market is huge in United States, as you know. So what's a big difference between Korea here? It's a tiny market in Korea. So we strongly recommend if you need to raise more money. So I recommend to becoming US stock exchange. So when you decide to go public in US stock exchange, you have 4 different ways. The one is IPO, initial public offering. This is same way in Korea. However, in United States, there are another 3 ways. It's a reverse merger. It's recently WeWork used this way, reverse merger, and get listed in Nasdaq. And previously, the Microsoft and the Burger King used this way, reverse merger. And we have another way, the direct listing. So it's a big company, and no need to raise money at the IPO. So they choose direct listing and the SPAC. SPAC means the de-SPAC. SPAC is it's like a empty company. There are no business, and acquire the business company and go public. So it's recently, it's the easiest way to use a SPAC. However, IPO also still effective. So this is an overview how difference it's a traditional IPO, the direct listing, and the SPAC. So maybe you can download, I'm not sure, but you can download or get this slide. So why we recommend Nasdaq listing? Because our period is very short, only 9 to 6 months. This is the ideal one. So less than 1 year and can raise more money. I'm sorry, this is Japanese yen, but you can raise at least 50 million. And also, it's a market cap. It's become bigger than Korean Stock Exchange. That is, we strongly recommend to get listed in Nasdaq, and you can have it's a U.S. presence and a global presence also. So, do you know the public company in Malaysia? Do you know the public company is Cambodia? I don't think so. Nobody knows about that. It's the same way. In a globally, nobody knows public company in Korea. Especially it's except Hyundai or Samsung, the very well-known company. However, most of venture company, nobody knows. However, when you get listed in Nasdaq, everybody knows your company. Okay, so we are providing a consulting service to a Japanese company. Fortunately, we engaged 18 customers at this moment, and many of them already start trade. So we provide full consulting service to Japan, and also we start Korea. So Nasdaq listing is like it's in a deep forest or in a maze. It's very, very difficult to find right way to get listed. However, we provide good consulting. So we support with very experienced and listing experienced. So we provide the best way to Nasdaq listing. So HeartCore provide listing experience because we are public trading company, and with support experience. We have 18 customers, and 5 of them already start trade. So we have enough experience about this area, and we are bridging gap and differences. So there are big difference because for the audit issues, so it's a quite difference between U.S. market and Korea. So we adjust gap and difference, and also steadily managing process and providing partial advice. So that is also important for the get listing in Nasdaq. And our strength of our service is it's a 2 ways. So bridging divisions, vertical, and also we know the Korean law and the Korean tax law, and the U.S. law and the U.S. GAAP. So we know the difference. And we also providing project management and also practical advice. That's the most important for the Korean venture companies. And also we provide specific service. Specific service. So we assigned US CPA and Korean CPA. Also, we are now arranging that. And we try to help to finish audit with shortened time. It takes probably 6 to 4 months. And we also create support for creating F1 or S1 registration statement for the SEC and Nasdaq. And also we bring in some investor from Korea and Japan and the United States. for the IPO. The SEC filing document preparation support also important, and the due diligence support, I'm sorry, and also roadshow support too. We provide full services to your companies. And what's the benefit of listing on Nasdaq? So short time listing, this is very important because if you run the IT companies, the AI changed the world recently. So you need to use AI, of course, but 1 year ago, 2 years ago, no AIs at that time. So it's a big change. So once you decide to get listed in Korea 3 years ago, there are no AIs. So it's a very traditional way to create, for example, the document, images, or presentations, something. However, it's nowadays use AI, so it's easy to create that. So big change for this. So short time listing is very, very important for the venture company and the scale fundraise. So typically Nasdaq, if you get listed in Nasdaq, you can raise 15 million US. That's a good number between US Korean market. So scale fundraising, after you get listed, you can raise additional money. Transaction, ELOC transaction. After 1 year, you can use ATM. There are many ways to increase your or scale fundraise and global expansion. Once you want to acquire the outside Korea company, for example, you want to acquire a Singapore company, you want to acquire a Malaysian company, you want to acquire a Japanese company, that's easy because everybody knows you have global expansion. So that's a big benefit for listing on Nasdaq. And also, this is a significant short-term time required for listing. So this is US. It's 6 to 9 months, and the Korea, it takes more than 3 years. So that's a big difference. And also, I'm sorry, this is Japanese. However, this is a large-scale fundraise, so you can raise money in United States. And bring in as Korean investor from your IPO at your IPOs. And also acceleration global expansion. So more than 5 times market capitalization. So this is Tokyo Stock Exchange, and this is the US. It's almost the same as Korea, a little bit less than Tokyo Stock Exchange. However, that's a big difference between the US and Korea. So if you need to raise more money, I strongly recommend to get listed in Nasdaq. Okay, toward Nasdaq listing. So once you decide to start this process, you need to hire the underwriter. Today, Deborah joined. So Deborah, they take my deal many. So how many? 1, 2, 4, maybe 4. And counsel. So today it's Hunter Talman joined today's session. The audit firm BDO today joined. So we prepare all these groups. So it's easy to discuss with them today. And after that, so all team work together and help you to get listed in Nasdaq or NYSE. It takes ideally 6 months, but actually less than 1 year. So most hard point is audit, finish audit. So it's a very difficult to audit. finish audit with shortened time. However, we try to help you. And also cleared SEC, clear Nasdaq. Raise capital from Korea and US. We also help you. And, this is cost of listing in United States. Unfortunately, the US is very, very expensive. For example, I use my lawyers. It's not Hunter Taffman. They provide a very cheap price. But I use my lawyers. Sometimes somebody sue us, and we need to protect. So we need to hire. So lawyers' cost is extremely high. When I use my lawyers, so the hourly charge is 2,000 US. When you want to reply your email, it takes 2 hours. They charge 4,000 US. It's crazy. Finish one issue costs about 10,000, more than 10,000. Typically, it's about 50. It's crazy. So unfortunately, United States fees is very, very expensive. However, we assigned Hunter Taffman, they agreed to the fixed price underwriting. I'm sorry, it's but this. Oh, it's a Wi-Fi. Okay, so they provide a fixed price for the Korean company, and also we assigned audit firm and also there are underwriter here. So we can provide you fixed prices of these areas. So it's easy to find how much do you need. So it's approximately it's less than 2 million US. Not so expensive. Once you get listed, you can raise 15 million, but the expense is 2 million. That's good money. The D&O insurance. D&O is director and officer insurance. Is also expensive. When I get listed, D&O NYSE, NYSE, it's a SEC and the Nasdaq request 2.5 million D&O insurance. It costs about 500,000 annual just for the insurance. It's a crazy amount, but they required, so we paid it. So D&O insurance is also very, very expensive. So Nasdaq and FINA cost is not so expensive, only less than 100,000, include both. And this is a system required for US listing. You need audit, and you need due diligence, everything here. So you can check after these seminars. I have another 5 minutes. So this is my client, how much they spent and how much they take time. So this is a Sierra Technology. They finished 7 months. Get listed. We finished 6 months. And the Pixie Dust, if you finish 9 months, and it's very quick. And, this is the structure for get listed in Nasdaq or NYSE. So CEO and management and the CFO is most important for this transaction. So and we provide consulting service. So we assigned many staff for all your companies. And so I don't need to explain this one, okay? This is a cost structure of US listing. I already explained you. So estimate quote, okay, this is not so good. So most important is Nasdaq frequently change rules. And unfortunately, some of them is unwritten rule they have. So we can provide you to find a way based on experience. So if you the written rule, somebody always, Japanese, my client always ask me, where is this rule? Unfortunately, this is not written rules, but actually they have a rule. And also, Nasdaq has many different examiners. Some examiner is good. Another examiner, unfortunately, not good. So unfortunately, you get the bad examiner. So you need to find a good way to fix the solutions. So there are many different rules at this moment. So you need to ask lawyer, you need to ask underwriter on this seminar. Okay, this is estimate cost for us. So we typically charge 500,000 upfront fee. And benefit of engaging our services. So we provide full services. You don't need to hire any staff for the IPO. And audit, we assign the CPA and the US GAAP consultant to your company. And also we translation into English from Korean. And also we provide full experience and low cost. So this is our benefit. So after this seminar, I bring in some books for you. So if you need this book, unfortunately, this is a Japanese book, but you can use AI for translation of these books, or you need to ask anything about IPOs. So please free to ask me. So thank you very much.
Thank you, Mr. Kano. Our next speaker will take deeper into the legal procedures for IPO. Please join me in welcoming Mr. Champagny, partner at HTFLC, with extensive experience advising international issuers. He will outline the legal milestones and requirements for a successful US listing.
No, it's not. Here.
Looks like Mr. Champagny is going through the security check at the airport.
Yeah.
He's being stripped off.
Okay.
Okay, are you ready?
Yeah. So this one. Okay. Good morning, everyone. Very excited to be here with you today. And I'm looking forward to addressing your questions at the end when we have the Q&A session, I think. I also have two of my partners here today, and Mrs. Ying Li and Mr. Warren Wong. So if you have questions about the US legal process, if you don't find me or I'm busy, please feel free to talk to them and ask your questions. This is a brief summary of who we are. We're a US firm based in New York with an office in Florida and an office in Washington, D.C. Our main practice is to help Asian companies become listed in the US. We are working with Chinese companies, Singaporean companies, Japanese companies, Malaysian companies, and we are looking forward to working with Korean companies as well. So this is a pretty much up-to-date list of the IPOs we've closed so far in 2025. We represent both the issuers and the underwriters. If you look at this slide, there was a Korean listed company based in Hong Kong that also got listed on Nasdaq at the end of last year, WingYip, and so this is where we did our first deal in Korea with a Korean company. More deals that we closed. We've been ranked in top 2 law firms in the US for the number of IPOs, and we also work on US companies going public in the US. But our core practice is really Asian companies. So today I'll walk you through the benefits of a Nasdaq listing, some requirements to be listed on Nasdaq, a brief overview of the documentation required and the process, and then of course talk about once you're listed, what's your ongoing compliance requirements. So the benefits of Nasdaq are really, let me tell you a bit about Nasdaq first. Opens in 1971, was the first automated exchange in the world. It's one of the major stock exchanges in the US and the second largest stock exchange in the world by market capitalization today. As of May 2025, there were more than 3,200 companies listed on Nasdaq. With a focus on technology, most technology companies go and get listed on Nasdaq. In the first half of 2025, there were 142 new listings on Nasdaq, IPOs, raising approximately $19 billion. And those include straight IPOs as well as SPACs. This presentation is really going to focus on a regular IPO. I may touch upon a SPAC, but I think this is really more on a regular straight IPO. What are some of the benefits of listing on the Nasdaq? Liquidity. Nasdaq is known for its high trading volume and liquidity. The previous speaker was showing you some slides comparing the liquidity in the US to some other markets. Once you get listed on Nasdaq, it's very prestigious. It's home to many well-known companies, technology companies, Microsoft, Apple, Amazon, Tesla, and some others. So being listed on Nasdaq makes you part of a big, large group of companies, and your reputation is going to increase. Market exposure, it provides a platform for companies to gain exposure to a broader market. Also, as discussed earlier, it gives you some tools to grow your company for future acquisitions or future financings. Once you're listed on Nasdaq, you also have access to institutional investors, which you wouldn't have before. You get coverage from analysts, and it's Nasdaq, while attractive to technology companies, also is a platform for many other industries. The listing requirements for Nasdaq they are a little easier than other markets in Asia. They are very clear, and even though they change regularly, they are easy to follow. There are a foreign private issuer, which is a company that's not domesticated in the US, are subject to lesser requirements than a US company, which gives them a little bit more flexibility. There might be some change to this, but we'll discuss this later. There's no real requirement on profitability. So once you're listed on Nasdaq, as long as you maintain the ongoing requirements for staying on Nasdaq. Being profitable is not an issue. Some other exchange do require that. Being listed on Nasdaq also gives you the opportunity to raise more money. Usually, whatever you raise in the IPO is not really that much. The upside of being listed on the Nasdaq comes later when you do subsequent offerings, like follow-ons or ATM offerings or pipes. That's where you have the larger investors coming in now that you're listed on Nasdaq, and that's where you have the opportunity to raise more money. It's easier listed on the stock exchange. Liquidity and the market performance. It's a case study of one of our and raised $70 more million. You know, and then another one generating proceeds of 125 million. So even if the IPO proceeds were not that significant, in the next few years, they were able to raise more than $200 million. So that's the main reason why companies get listed on the Nasdaq. They have really access to liquidity. The IPO is just the first step. Once you're listed and you meet the criteria, for example, you have to wait 12 months to get 12 months. You have access to capital. So what are the requirements? So the stock market is the second largest world by market capitalization behind the New York Stock Exchange. The Nasdaq and the Nasdaq Global Select market for large cap companies. Most of the IPOs that we work on for FPIs coming from Asia, most of them are on the capital market. I'll just briefly talk about this. Earlier in September, the Nasdaq announced proposed changes to its listing standards. They wanted to address some concerns they had about volatility and wanted to sort of lift the bar a little bit for the listing standards. They increased the minimum company public float under the net income standard, which is the standard that most companies use to get admitted to Nasdaq. They increased it to 5 million. They also want to accelerate the process of spending and what it currently is. The Nasdaq these standards implemented the company IPO process would have as proposed, you complete their application with Nasdaq under the current requirements. And all new listings, once the rule is approved, all new listings would have to comply with the new rule. There have been some comments issued by players in the market, and we don't know when the SEC will confirm the rule or whether some of the changes will be reflected in the final rule. So those are the initial listing for Nasdaq capital market. Said usually fall under the standard. Have net income for the last 2 fiscal years of $750,000. You also need market value of unrestricted publicly held shares, which is the public float, currently 5 million, but with the current rules would go up to 15 million. Those are the standards for the Nasdaq global market. I won't discuss those. They're higher because the companies applying to this tier of Nasdaq are larger companies. And this is the highest tier on the market, the Nasdaq Global Select market, where the requirements are a little bit more stringent as well. So to go in the US and be listed on the Nasdaq, there's a process with documentation to be submitted to Nasdaq and the SEC. So we'll just talk about it a bit. Someone from the auditor will discuss this in way more detail. Know way more about this than I do. This is just a high-level summary, but they must be prepared in accordance US GAAP or reconciled to US GAAP as under the SEC rules, or they must follow the IFRS standards. Usually, a foreign private issuer files a registration statement on Form F1 at the SEC, and that registration statement include audited financial statements for the past 2 years. They have to be audited by an independent auditor, and that auditor must also include an audit report. So the consolidated financial statements must include a balance sheet, income statements, statements of change in equity, statement of cash flows, and schedules are required. This is a very important slide. What we see is really for a company to be ready to start the process of applying to Nasdaq and become a listed company in the US. It requires sometimes for the company's financials to be ready, so that when they start the process, they have their 2 years of financials audited. It takes time, and it's really key to getting the IPO done. So hiring the right auditor for your IPO is really important. It must be prepared in compliance with US GAAP or IFRS. There can be prepared according to local GAAP, but we have to disclose the variations. In terms of aging, once you want to become effective with the SEC, you need 2 years of audited financials, and the oldest financial statements must not be more than 15 months old. So usually you have to request a a special dispensation from the SEC if your financials are more than 12 months and less than 15. Just a brief discussion on what is a foreign private issuer. As I mentioned earlier, foreign private issuers don't have to comply with all the rules that U.S. companies have to. They may decide not to comply with certain specific requirements of Nasdaq. So a foreign private issuer must be a foreign non-U.S. company and not a government entity. It must have 50% or less of its outstanding voting securities directly or indirectly held by U.S. residents. If 50% or more are held by U.S. resident, that entity must not have a majority of its directors as U.S. residents or citizens, must not have more than 50% of its assets in the U.S. and must not run its business principally in the U.S. Most of our deals are really with FBIs. We have a few instances where we had non-U.S. companies creating holding companies in the U.S. And they use that as the listing vehicle. So we didn't use an F1, we use an S1. But mostly the way our deals are structured is there's an offshore holding company, whether in Cayman Islands or the BVI, which is holding the operating subsidiaries in Asia. And that's that holding company is the one being listed in the US. So a private company that does not qualify as a foreign private issuer under these criteria will be treated as a US domestic company under SEC and Nasdaq rules. I won't go into too many details, but a foreign private issuer always have the options to follow its own country practice in lieu of Nasdaq corporate governance. And it must do that by submitting a statement to Nasdaq. And usually that's done with local counsel who can certify that's what's being done in that country. Most of our clients, although they're eligible to follow home country practice, do not, but it's always an option. In Asia, foreign control public companies are subject to largely the same listing and post-listing requirements as domestic companies in the US. FPIs, foreign private issuers, such as those formed in Korea, can benefit from certain exemptions, as I said before. For example, FPIs have 4 months after their fiscal year end to file their annual report with the SEC. It's a report on Form 20F. It's 60 days or 75 days or 90 days for domestic US issuers, depending on their size. FPIs don't have to file quarterly reports like 10Qs. I think you have also this requirement here in Korea where you have to file periodic reports. So for an FPI, you only have to file a 6K, which is to disclose if anything material happens to the company. Also, Nasdaq requires an FPI to issue a 6K to disclose their interim financial statements once a year before the end of their fiscal year. So it's a lighter reporting requirement than a US company. again, accounting standard, US GAAP. There are some other discussions, but I think my fellow presenter will discuss this after me. There's certain exemptions from disclosure rules from Regulation FD for FPIs that provides that when a domestic US issuer discloses material non-public information to a certain person, it must at the same time make a public disclosure. That doesn't apply to FPIs. And FPIs are also not subject to Section 16 of the Exchange Act, which requires insiders to file public reports of their share ownership and trading activities. So this doesn't apply to an FPI. Just briefly, there was a release from the SEC which was asking for comments by September 8. So the date has passed, but I haven't read any update on this. They were thinking of changing the definition of private issuer to kind of even the requirements for foreign private issuers and domestic companies. They wanted to make sure that US investors are protected the same way, whether it's an FPI or a US domestic company. Again, I don't think there's been an update, so we don't know if that definition is going to change or not, but it's something just to keep in mind in case it happens. So SEC filings, in addition to the Nasdaq requirements for listing, depending on the market you list on, an FPI must register its shares with the SEC. So in connection with an IPO, companies raise a certain minimum amount of money, and they must register their shares by filing the registration statement on Form F1 with the SEC. And that includes a prospectus, which is the document that is being used by the underwriters to market the deal to their investors. Filings I made electronically on EDGAR, which is the SEC filing system. Typically what happens on an IPO is you first submit a confidential filing, you get some comments, you can go several rounds of confidential filing, and typically companies clear all the comments with the SEC before filing publicly one with EDGAR. All confidential filings are not showing on the SEC website until you make the first SEC public filing. So they're all released. Then once you're close to the end and you're cleared all SEC comments, you also have to make sure that the underwriters and their counsel and the company have cleared any comments by FINRA, which regulates the underwriters. Typically, this moves along the same timeline as the SEC, usually much faster, actually. Timetable, this is just a sample timetable. I know the previous speaker talked about, 6 months. In my experience, that's not really the case. It takes, unfortunately, longer. So what we see is typically 12 to 18 months, which is more of the recent timeline for IPOs. So the main thing again is, once you start the deal, to when you go effective with the SEC, it all depends on how many rounds of comments you're going to get from the SEC. So as I said before, you really have to make sure that you have your financials in order. You have the auditors all lined up, ready to issue their opinion, sign off on the registration statements. You have to have the underwriters that you selected ready to market the deal once you're clear with the SEC. And you also have to work with Nasdaq, which you have to submit an initial application with Nasdaq. Nasdaq will have some comments, pretty much always the same, but there's a long list of comments, and as they do their own due diligence on the company, they'll issue more comments. So that takes a while, and Nasdaq lately has been taking a bit longer than it used to. After the initial submission that you make with the SEC, you have 30 days. The SEC has 30 days, sorry, to respond and issue comments. And then the company and counsels will respond to those comments, and this goes on until the SEC has no more comments. Also, I understand that there's a similar process in Korea. So a Korean company going for an IPO in the US would also have to make some filings here in Korea concurrently with the filings made in the US and clear with the regulators here. I think the timeline is a bit different, but my understanding is that it doesn't add any time because it's 30 days in the US. I think it's 15 and then changes some other deadlines in Korea. So I don't think that would raise an issue, but the next presenter will go into this a little bit more in detail. Again, before you can go effective, you need the no objections letter from FINRA, and you have to make sure that you don't have any more comments from Nasdaq, and they issue their approval to go on Nasdaq. Use of a dual class structure. A lot of companies use a dual class structure. Class A, Class B. They're going to be listing the Class A, which are the securities going to be offered to the public. Class B shares are shares that are issued to the founders of the company or key investors. This is usually done to protect the interest of the founders, and that's something that is totally accepted by the SEC and Nasdaq. It's very common in the US, so it shouldn't be an issue. One more thing, maybe not on the slide, but most Korean companies that are currently public in the US do not list their shares directly. They list ADRs, American Depository Receipts. So it's a two-tier structure where instead of investing into shares, you invest into those certificates that represent shares of the issuer. It's done for several reasons, which again is going to be discussed after that. But it's very common in the US and doesn't really add a lot of complexity to the deal. Sometimes it makes it easier to comply with local laws. Cost of listing, I won't go into numbers, but you have to keep in consideration that you'll have to pay fees for the underwriters, the auditors, your legal counsels, not only US counsels. By the way, we don't charge $2,000 an hour for an email, so don't worry about that. It's usually flat fees on an IPO, and so it's something that can be controlled by the issuer. And also local counsels, very important. If you're using a Cayman entity to go listed, you need a Cayman counsel. If your operating subs are in Korea, you need Korean counsel, because they all need to work together to make sure the prospectus and the registration statements are disclosing everything under Cayman or BVI law or Korean law. So you also have the cost of a transfer agent. You also have the cost of a financial printer. The costs vary depending on the complexity of the deal and the deal size and the various auditors or law firms that you're going to work with. But keep that in mind, that you have costs for the IPO. You have costs to get ready for the IPO. You have costs post-IPO, and then you have some ongoing compliance obligations, which also. But everything can be quantified, and the costs are not that significant when you think about potential of talking about this. How many? Once you're looked at, I mentioned before, you have to file a Form 20F, Form 6K. When something material happens to the company, you also become subject to Sarbanes-Oxley, various rules to comply. Same thing here. Corporate governance rules, you'll need to have an independent board of directors and audit committee. So, you'll have to have a majority of independent directors. So that's something to think about too when you start your application process. You need to find candidates that would be your independent directors. The compliance rules, once you become public, you have to comply with certain ongoing rules that are listed here, depending on what market you're on. And that's it for me. I'll be happy to take any questions at the Q&A session. I'll give the podium to you.
Our next section brings a Korean perspective. Mr. Kim Kang-shin, partner at PKL LLC, will speak on legal issues faced by Korean companies going public in the Nasdaq. He will highlight potential challenges and how to mitigate them, drawing from his deep experience and expertise of advising Korean corporates on cross-border transaction. Here is Mr. Lee Gang-shin.
안녕하세요. Thank you for coming. So, for the benefit of the conference, I will speak in English. Oh, it's on the way around. Where's my slide? Yeah, here. Okay. My name is Gang-shin. I'm a partner at Baker Millie LLC, which known to Koreans as the 법무법 in 태평양. I'm in charge of our capital market and IPO practice, and I've been equally practicing onshore IPOs, meaning the Korean companies listing on the Coex exchange, as well as an offshore IPO, including the Nasdaq. Today's discussion will cover not only the Korean companies listing to Nasdaq directly, but also I will also discuss about some of the structural changes of a Korean company to an US or other offshore entity to enable the offshore entity to be listed in Nasdaq. The reason is that even though the entity is not domiciled in Korea, such an offshore entity may be subject to Korean legal requirement, in particular the SRS filing requirement and also the FX reporting requirement, depending on the shareholdings of that company. Just let me show some of the recent precedent. Nasdaq listing of a Korean company is very rare. Actually, the most recent one is the 2021 Double Down Interactive. This is a subsidiary of a Korean listed company, W Games, and is also at the same time a holding company, also US company. So this is a Korean holding company, but it has huge US operation. So this is the possibly the only precedent that Korean company get listed in the form of the ADRs. Other precedents for Nasdaq, we have to go back to 2006. At that time was G-Market, which is now a part of EMAT Group, which intermediately purchased by eBay from US side. And also we had some precedent of Hanwha Telecom, now SK Broadband, Gravity, and Wider Than. But this is all just before 2006. And the reason being is that the Sarbanes-Oxley, which which increased the cost for maintaining U.S. listing, has affected overall downsizing of the foreign issuer to be listed on the Nasdaq side. At the same time, in 2006, the Korean FSS, 금융감독원, Financial Supervisor Service, has just introduced a new rules pursuant to which the Korean company needs to file a securities registration statement, 증권신고서, when making its public offering outside Korea. Most recent trend from the Korean components of the listing is maybe US flip or SPAC. So one of the recent precedent, which I personally worked on, I also worked on the Double Down Interactive and other G-Market and Hana Telecom back in even 1999. But Webtoon Entertainment, a subsidiary, US subsidiary of Naver, listed in the US last year, 2024, transaction. And at that time, also that the transaction was proceeded not only from the US filing side, but also from the Korean filing side as well. And other notable precedent is the most famous one, Coupang. But Coupang is a Delaware company, and they have been designed to avoid some of the Korean regulatory requirements. So there was no SRS filing for Coupang concurrently with the Nasdaq listing. And one of the motivation for using the US on offshore entity is the dual structure that my previous presenter has mentioned, which is not permissible under Korean corporate law. And recently, some of the SPAC precedents were introduced, including the most recent one was the Wave Media, and we also have Captivision on OSR Holdings using the US or offshore SPAC structure. This is a listing of an offshore entity, but all the operation through the wholly owned subsidiary is being operated in Korea. The key consideration for Nasdaq listing from a legal perspective, I would like to mention 5 things. Number one, from a offshore, the US flip or the offshore flip perspective, tax is a very key component, meaning that when you just convert Korean company into an offshore entity, there is no tax deferral under Korean tax law, meaning that any difference between at the time when you acquire the shares of the original company and the time of the conversion, the value difference will be calculated as capital gain tax, which means that if that calculation number becomes substantial, it may have a very adverse effect in adopting the structure. So if you consider a flip structure or using an onshore and offshore entity for listing purposes, then you need to just first calculate what the capital gain tax impact that such conversion may involve. The second issue, this is mainly from a Korean listing a Korean entity, and the question is whether the Korean company of Korean shares by itself can be listed in Nasdaq or offshore. Actually, there has been one precedent back in 27 or 20 years ago in 20th century. The company called BruNet listed its underlying shares without using the ADR structure in Nasdaq. This is a pioneer transaction. Unfortunately, BruNet is no more existing. But from an legal angle, there is some doubts whether this is permissible from a Korean law perspective. Why? There are two reasons. Under Korean law, in case you want to transfer the shares of a Korean company, there are 2 ways. Number one, you just deliver the physical certificate of shares to the transferee. It just may not be possible. And secondly, you need to make an account transfer through the electronic system through the licensed brokerage company. This means the licensed brokerage company means a company licensed to brokerage in Korea. meaning that 한국증권회사, that it means that any account transfer or electronic transfer outside Korea in US or elsewhere by non-licensed Korean security company may not be viewed as a transfer of shares from a Korean law perspective, meaning that this is not any transfer in a Nasdaq or any other stock exchange outside Korea may not be construed as a valid share transfer, and this could potentially pose an issue from a legal perspective. As such, from a legal perspective, we recommend to just utilize the ADR structure for a Korean company. And the third one is the Korean FX rules. Korea is still a country with very rigorous FX restrictions. For Korean companies to issue securities outside Korea, including ADRs, in excess of $50 million US, you need to procure you need to have a report of an FX report to be accepted by Minister of Economy and Finance, 기재부. And this is sometimes cumbersome process because the government does not wish the transaction to involve any type of foreign exchange impact. So we would recommend that you consult with the MOF in advance when considering to list your ADRs outside Korea. The first issue is, as discussed very briefly with my previous presenter, the SRS, 증권신고서 issue. That means that under Korean law now, then when you just procure a public offering outside Korea, you should also just process the SRS filing requirement process concurrently with the foreign filing. So the councils, Korean councils and US councils align with the underwriter to make the time plan. As said, it's doable, but need to be meticulously and carefully prepared. And also bear in mind the pricing can only be made once the SRS becomes effective. So you need to just refrain from soliciting investors or just confirm the pricing unless your SRS becomes effective also in Korea. And finally, you need to also consult with relevant authority and stockholders for purpose of the IPO. So let's discuss about the ADR offerings, focusing on the listing of the Korean company itself. It's as said, the preference of the investors is always to list the shares directly, because that the investor can exercise the shareholders' right directly with that company. But for the reason that I have said previously, that it's quite cumbersome for adopting the share listing structure for Korean companies. So we would utilize so-called an ADR offering process, whereby the target company, meaning the issuer and the selling shareholder, deposits its shares with the custodian. It's dominantly by Korea Securities Depository, 한국예탁결제원, and they will coordinate with the foreign depository. For US, typically dominantly by Citi and also JP Morgan, and the depository will issue the ADRs underlying the shares, and such ADRs will be just solicited for the investor to purchase. And from a legal perspective, ADRs are designed to have the practically similar effect as investing in the underlying shares, and the agreement so-called the depository agreement, which is a very standard agreement, is functioning to act that role. So the ADR holders can exercise shareholder rights through that depository and KSD the voting rights, the underlying shares, receiving the dividends, or exercising preemptive rights. So although the deposit agreement is governed by New York law, the company's obligation to common shares remains subject to Korean law. The overseas flip, this is designed to convert Korean companies into a foreign entity and enable the listing of the foreign entity directly with the foreign stock exchange. The structure, again, the reason why using the overseas flip is to utilize some of the beneficial structure available outside Korea, especially the dual listing, dual class of stock mechanism, which was the main motive for coupon transaction, meaning that the controlling shareholder, the founder, can exercise the voting rights more than he or she has. But in Korea, as you know, Korean law only permits that one share, one voting rights. Yeah, the way it is being structured is simply that the existing shareholders of Korean company, CEO, or financial investors or employees, subscribe their shares on U.S. or just Cayman or an offshore entity, and the U.S. or foreign entity, offshore entity, in turn issues new shares to Korean existing shareholder, which de facto functioning as a stock swap or just a stock exchange. Bear in mind, in connection with adopting this structural change, there are certain Korean FX law reporting requirement to be triggered, both to onshore and offshore sites. So you have to just procure all the FX reporting in advance of your structural change. In addition, you have to consider, in case the Korean shareholder of a Korean company exceeds 50 or more, then there is a potential risk that the change could trigger another KSRS filing requirement from a Korean securities law perspective. So you need to consult with your legal experts whether this is the case. The SPAC, actually, this is a part of the process utilized by the US flip that I have previously mentioned. SPAC is a special purpose acquisition company already listed, and this will ultimately serve as a consequence of listing this is de facto of a flip process. So the structure could be as similar as the US flip structure we have seen, but in the recent transaction, there are some involvements of US merger sub, Care exchange sub, and also the reverse triangular merger, which ended up in step 2. So US SPAC, the existing Korean shareholder of Korean company becomes the SPAC shareholder, and US SPAC and Korean company becomes the wholly owned subsidiary of the US SPAC. The similar legal issues as in the US flip will also be applicable in case of SPAC transactions, but also bear in mind, in case the SPAC, after Korean shareholder becomes the controlling shareholder of the SPAC, in case the SPAC seeks to make another additional public offering or any type of public funding, then such funding could also be subject to SRS filing requirement. This is the presentation for today. I think I'm also here with my colleagues down around. So if you have any questions, feel free to ask me or my colleagues on the floor. Thank you very much.
자, 그럼 시간 관계상 시작을 하겠습니다. Due to the time limitation, we'll start the session 2. Welcome back. Our next session will be capital raising strategies in the current US market, presented by Ms. Stephanie Hugh, and the next half of the presentation will be presented by Mr. Dave Lee.
Good afternoon, everyone. Welcome. This is Stephanie. I'm a partner and co-head of investment banking from Debra Capital. Our team will discuss the topic capital fundraising in the current U.S. market. So let me just quickly introduce who we are, what we are doing. So Debra Capital, we are a global full-service investment bank based in New York. We are providing service including investment banking, capital market, equity research, sales and trading, and wealth management for the middle market and emerging growth company worldwide. We are providing different financing products, including IPO, follow-on, PIPE, RDO, CMPO, ATM, SPACs, D-SPACs, and strategy investment. There are some numbers on the top right. We are number one for SPACs and number one for the IPO for the past 3 years. We have completed over 350 plus transactions over the past 4 years, raising over 35 billion US dollars. This year so far, we already done 17 IPOs. We have advising Asian clients since inception. Number one for the all Asian transaction since 2022. Number one for Asian IPO since 2023. Since 2023, we have already completed nearly 30 IPOs, Asian IPOs. It has completed over 64 transactions, raising over $5.3 billion for all our Asian clients, including mainland China, Hong Kong, Macau, Southeast Asia, Singapore, Malaysia, Japan, and Korea. Clients choose us as their investment banks underwriter for their IPO. IPO is the only first steps, and we will continue providing service for their any future financing needs. This page shows our repeat clients. Highlights are our Asian clients. They continue choosing us for trust, and we will be their long-term partners. Next sections, I'd like to discuss IPO and the SPACs. There are two different ways to get your company listed: traditional way IPO and SPACs. For IPOs, first of all, you will need to get all service providers engaged. Auditor will complete their audits in normally 2 or 3 months. Lawyer will drafting your prospectus. And investment bank underwriter like us will do our due diligence works. We will plan for initial filing after your audit's done, your prospectus is ready. After we initially filed, SEC regulatory review normally takes 3 to 5 months. After regulatory clearance, we will plan for 2 to 4 weeks roadshow meetings with investors. And then we will price the IPO, trade, and close the IPO. So why people choose U.S. market for their IPOs? U.S. markets has the well-established regulatory framework. SEC provide a transparent review process. NYSE Nasdaq is the globally recognized gold standard by investor, customers, and partners. Valuation on U.S. capital market are optimized. You can access to the widest pool of institutional and retail investors worldwide. Investment bank like us provide equity research coverage. We will enhance the market confidence. U.S. market has the best liquidity in the world. That attract the best clients and the investor to put their money into the U.S. markets. Stabilization mechanism and IR actually support you after market, which can strengthen your long-term positions. On the other hand, for SPACs, SPAC is the fastest and flexible way to the U.S. capital markets. SPAC IPO normally takes 3 to 4 months to get listed, and normally D-SPAC take 4 to 6 months to complete and get listed. SPAC attract hedge fund, institution, and retail investors through different features, including units, warrants, and rights. de-SPAC has a higher valuation than traditional IPO because you use the projection numbers in the next 3 to 5 years. Then traditional IPO only use the historical number for the past 2 years. So the valuation will be higher. So for SPACs, funds are secure at IPO stage, ready to be deployed for any future de-SPAC reverse mergers. The benefits for being a de-SPAC sponsor, it gives the sponsor a great chance to attract high quality targets. Once you get your SPAC listed, a lot of target company will approach you looking for these SPACs. Founder shares provide leverage upside with limited risk capital at firm. SPAC issuing warrants, rights, and shares create liquidities and also provides the sponsor optionalities. The benefits for being a de-SPAC target, as I mentioned earlier, valuation of the de-SPAC is typically higher than the IPO. You can raise the PIPE financing during the de-SPAC, which can bring in strong institutional investors. SPAC is the farthest way to get your company listed. The next couple page, I want to discuss the case study that we recently closed. So the first one is Wingyip Food Holdings. This is the first Chinese company dual-listed in Korea and the US. We helped them get dual-listed in the US last year in November. The price went up from $4 to $11, nearly 280% increase. Because it's the first Korean deal we have done, and it's successfully listed. So that's why we are here and want to get more exposure in Korean market now. The second one is the Mason Glory. It's the Hong Kong-based issuers that we recently listed in July. Their price also went up from $4 to $14 with over 350% increase. This one is the SPAC and de-SPAC case study. We set up these SPACs called DWAG in 2021, raising over $287 million, and they closed their de-SPAC with Trump Media. Some of you probably heard about this name, as this is the current US President Trump, his business, his company. So this company was valued at nearly $1 billion, and it went up to $8 billion after it publicly announced. We raised $50 million PIPE financing during their de-SPACs, and we raised additional $2.5 billion in July last year after they get listed. We are the sole book runner, underwriter, and placement agent for their listing. After they list, we also introduced 2 different target companies for their M&As. Okay, let me turn to my partner, David Lee, to continue our next topics regarding the follow-on transactions.
Goes too fast. Very sensitive. Yeah, it just skips. Okay.
I don't know what's going on.
Yeah, that's okay. Just yeah, thank you. Thank you, Steph. 안녕하세요. 저는 디볼 캐피털에서 세컨더리와 팔로우 오퍼링을 담당하고 있는 이정욱입니다. 아무래도 이제 주식 시장에서 이제 주식 상장을 했다고 해서 거기서 끝이 아니라 아무래도 IPO를 시작으로 IPO를 하고 나서 사후 관리, 주가가 변동 없이 스테디하게 잘 올라가고 거래량도 많고 투자자들이 관심을 많이 가질 수 있게 하는 것이 중요하고 또 그래야 후속 발행에서 더 많은 자금 조달을 할 수 있습니다. 저는 그래서 오늘 미국 자본시장의 전반적인 환경과 그것이 발행사들에게 어떤 기회를 의미하는지, 또한 이러한 트렌드가 실제로 어떻게 시장에서 구현되고 있는지를 보여드릴 몇 가지 케이스 스터디로 공유 드리겠습니다. 올해 초 트럼프 행정부 출범, 그리고 관세 압박, 거시경제 불확실성, 무역 전쟁 등으로 인한 투자자들의 신중한 태도 등 여러 가지 챌린지가 있었음에도 불구하고 2025년 미국 자본시장은 매우 견조한 회복력을 보여주고 있습니다. 올해 들어 지금까지 약 2,700억 달러가 1,100건 이상의 거래를 통해 조달되었습니다. 이는 2024년 같은 기간 1,810억 달러를 크게 상회할 뿐만 아니라 2021년 같은 시간 2,362억 달러보다도 높은 수치로 시장 전반의 활발한 활동 및 IPO 시장의 점진적인 회복력을 보여주고 있습니다. Follow-on offering, 그러니까 후속 발행 측면에서도 모멘텀이 더욱 뚜렷합니다. 2025년 현재까지 총 1,080건을 통해 2,473억 달러가 조달되었으며, 이는 2024년과 같은 기간 984건, 그러니까 1,611억 달러 대비 크게 증가한 수치입니다. 이러한 흐름은 기업들의 자금 조달 수요와 투자자들의 자본 공급이 맞물리며 더욱 강화되고 있고, 요약하면 후속 발행은 여전히 기업들이 자본시장에서 자금 조달을 할 수 있는 주요 수단이며, 변동성이 큰 시장에서도 IPO보다 더 높은 유연성을 제공하고 있습니다. 이거는 아까 스테프니가 말씀드렸듯이 저희의 어떤 캐퍼빌리티에 대해서 말씀드리는 거고, 저희는 아무래도 IPO와 그런 어떤 스펙, 또 말씀드렸다시피 후속 발행, 거기서는 선두를 달리고 있는 글로벌 투자은행입니다. 저희 팀원들을 보여드리고 있고요. 이제 포커스를 좀 돌려서 저희가 실제로 클로징한 그 실제 케이스 스터디를 보시면서 저희가 어떻게 클라이언트를 지원해왔는지 말씀드리도록 하겠습니다. 첫 번째 사례는 오메로스라는 회사인데요. 이 회사는 2009년도에 IPO를 했고, 이 회사는 FDA 승인을 이번 12월에 앞두고 있는 바이오텍 회사입니다. 저희 디보러 캐피털이 익스클루시브 플레이스먼트 에이전트로서 2005년 7월에 2,200만 달러 규모의 팔로잉 오퍼링 중에서도 Registered Direct Offering을 통해서 클로징한 딜입니다. 해당 자금은 회사의 클리니컬 및 프리클리니컬 파이프라인 개발 지원에 사용되었으며, 이 거래의 주요 포인트는 시장가 대비 약 14%의 프리미엄 가격으로 이루어졌다는 점입니다. 주로 팔로운 오퍼링은 디스카운트나 어떤 그런 워런트가 붙어 오는데, 지금 이 딜은 오히려 프리미엄에 프라이싱이 됐다는 게 아주 독특한 점입니다. 헬스케어 섹터에서 프리미엄 거래는 지난 1년간 손에 꼽을 정도였고, 결과적으로 이 딜이 시장에서 매우 긍정적으로 평가되었습니다. 이 딜에서 저희 DBC가 회사에 적합한 자본 파트너를 찾는 것이었고, 저희 고유의 투자자 네트워크를 활용해 장기적 파트너십을 제공할 수 있는 투자자를 발굴해 시장 가격 대비 프리미엄의 거래를 성사시킬 수 있었습니다. 두 번째 사례는 베리톤이라는 회사인데요. 이 회사는 2017년도에 IPO를 했고, AI를 기반한 소프트웨어나 어플리케이션을 만드는 회사고요. 2025년 6월에 저희 DBC가 단독 주관사로서 클로징한 1,000만 달러 팔로원 Registered Direct 거래입니다. 이 거래에서 저희 DBC는 익스클루시브 플레이스먼트 에이전트 역할을 맡았으며 조달 자금은 회사의 지속적 성장과 신규 사업 기회를 지원하기 위해 사용되었습니다. 특히 이 거래는 기존 투자자와 신규 투자자가 함께 참여하는 구조였으며 공모 발표 이후 주가가 70% 이상 상승하는 성과를 냈습니다. 이 사례는 기존 및 신규 투자자 상대로 다수의 딜을 동시에 클로징하는 엑세큐션 역량을 잘 보여주는 대표적인 예라고 할 수 있습니다. 여기까지 저희 DBC에 대한 발표였고요. 이따가 나중에 Q&A 세션으로 더 정보를 제공해드리겠습니다. 감사합니다.
Thank you, Stephanie and David, for your presentation. Next presenter is that focuses on the accounting dimension of IPO readiness. Please welcome Ms. Wendy Hambledon, Principal in the Global Capital Market Group at BDO US. She will guide us through the IPO procedures on the US accounting standards, including SEC reporting and audit requirements. You ready, Wendy?
Okay. 안녕하십니까. Hopefully I just said welcome. And it is my pleasure to be here today. I'm going to speak a little bit about the accountant's perspective in an IPO. And I've got the same issue here. Let me see if I can just gently. Okay. And I'm speaking from the perspective of an accountant, both the internal accountant, the CFO, and the accounting staff, as well as potentially the auditor. And we're going to cover a few things related to financial statements, then some issues related to internal controls, because that is one of the key factors that companies will have to prepare for, and some common areas of comments that the SEC gives when they do review a filing. And lastly, just a little bit about what the auditor's role is. So you've heard a little bit from my previous speakers about the IPO market itself. And you've heard the IPO market in some years was quite good, in some years was not as good, and in the current year didn't start out great, but now is going fairly strong right now and looking to end the year quite strong. So what does that mean? If you're from the accounting perspective and involved in the preparation of financial statements and involved in the preparation and making sure the internal controls for a company are strong, you don't want to be the holdup in the deal. You want to make sure that whenever the investment bankers come and say, this is the right time for the market, this is the time to file, this is the time for us to go effective, that the financial statements are ready to go, that the document is clean, that it's been through appropriate levels of review, it's been audited under PCAOB audit standards, all those types of things need to happen. So our objective, really, as accountants, internal, external, and in many cases you may need some assistance with this, some consultants and others, is not to slow the deal down. So that is really our objective in all of this. And to do that, though, there's some number of considerations that need to be done early in the planning phase, because that's where some of the most key decisions are made about the financial statements themselves. So what are some of those key considerations? And when I'm talking about financial statements for an IPO, it doesn't matter really whether you're doing a traditional IPO or whether you're the operating company in what's called a de-SPAC transaction. So if you have a SPAC and you're the company that might be acquired, the financial statement requirements are not dramatically different. But some of the decisions to determine which financial statements are a little bit different if it is a de-SPAC transaction or a traditional IPO. The first and probably most important consideration is whether your company can qualify as a foreign private issuer. And that is a legal determination, and my colleague spoke about that, but that is something that you want to understand very early in the process, because that determines not only the form of the filing, whether it's an F1 or an S1, or if it's a DSPAC, an F4 versus an F4, but it determines whether you have the option under the basis of accounting to use IFRS or whether you are forced to use US GAAP. And that is very important because in many jurisdictions outside the US GAAP is not commonly taught in universities, commonly used in practice. So if you're able to use IFRS, that is often a significant benefit in terms of the timing of preparing the financial statements, auditing the financial statements, and having the ability to then move forward. We mentioned earlier that the FPIs may be changing in the future. It was a concept release that came out from the SEC. It is not proposed rulemaking. There is a bit of time still before that could come into play, if it ever does. The comments that I saw to date were generally focused on not changing the overall definition of a foreign private issuer, and a lot of the comments were focused on that since the Commission allowed IFRS, that most foreign private issuers take advantage of that accommodation and use IFRS, and that regardless of any change that might be made in the definition, keeping IFRS as an available option was a strong consideration there. Now, in a SPAC transaction, if the SPAC is a domestic company, then you are forced to be a domestic filer. You don't have a choice. Likewise, in some of the transactions, if you create a U.S. holding company, then that means that you are a domestic company and you would have to file U.S. GAAP. So that's why I'm saying this is important to understand with everybody in the room what the structure is going to look like, because that's going to derive what your financial statements are likely to be. Within the filings of the types of companies, there are some categories. Most every IPO, that at least that I've seen, and most of the ones coming from this part of the world, will qualify as an emerging growth company. And essentially the biggest threshold for an emerging growth company in the IPO process is that their revenues are less than $1 billion US. So generally speaking, most companies going public will fit that criteria. An emerging growth company also has some advantages because they only need 2 years worth of audited financial statements instead of 3 in a filing. So again, that can, if you have not had an audit previously, and particularly because most companies would not have had an audit performed under PCAOB audit standards, that means that it's 1 less year of work that the auditors need to do, 1 less year of work that the company's internal accountants need to do, and so therefore it can move the process on a lot quicker. Another thing to consider is that in certain circumstances, financial filings need to include not only the company or the proposed registrant's financial statements, but there may be other companies that also need to be included in the F1, S1 financial registration statement. If the company has done a significant transaction, they've acquired another company, and I'm not going to get into the rules on significance because they're fairly complicated, but if there has been a substantive acquisition of another company within 2 years, sometimes it's a year, again, depending on significance, then you may need to include that set of financial statements, audited financial statements as well. Likewise, if the company has a significant equity method investment in another company, that set of financial statements might need to be included in your filing. And in some cases, particularly if you're creating a new holdco, there may need to be separate parent company audited financial statements as well. Usually those are fairly straightforward, easy to put together, because usually the holdcos are capitalized on a very nominal basis, but sometimes you need those. And what you want to know is what you need, again, before you get into the process. You don't want to get to having the first set of comments come back from the SEC and they say, oh, you need financial statements of this company, and you hadn't prepared for that. And then that could delay the whole thing 2, 3, 4 months or however long until you can get that. So again, just thinking about all of those things up front, it does help make sure that when everyone's ready to go, the financial statements are ready to go. So what is required in the financial statements? As I said, if you are a foreign private issuer, you do have some choices that need to be made. The first is you can file financial statements as long as you can make the assertion under IFRS that it is IFRS as issued by the IASB. Now, I understand that Korean IFRS is very similar to IFRS, and the statements that I have seen for Korean public companies, the majority of them are IFRS that qualifies foreign private issuers. So I don't believe it's very difficult to say that Korean IFRS or IFRS is issued by the IASB. The SEC is just particular about there not being jurisdictional aspects of IFRS when they allowed it. You can always choose to do US GAAP. The SEC is never going to object if you want to use US GAAP, but it is generally not as easy to maintain because you're often then maintaining 2 sets of financial statements, 2 sets of underlying accounts, because you probably need local accounts for your purposes here. You can also do local GAAP reconciled to US GAAP, but again, since Korean IFRS is very close to IFRS, you probably would never make that choice. I very rarely see anyone choose the local GAAP reconciled to IFRS for ongoing reporting. Occasionally you'll see that for an acquired company that might have to be in the filing, but not for the registrant itself. So, as I said, the ones in Korea that I have seen generally used IFRS. One of them didn't qualify as a foreign private issuer, so they weren't permitted to use IFRS. But regardless of the accounting, the auditing has to be done under PCAOB audit standards. So regardless of whether the company has previously been audited or not previously been audited, it is likely that there is additional audit work that will need to be done, because primarily it was done under local standards, international standards on auditing, Korean auditing standards, but the PCAOB has some very specific requirements in their audit standards, and in many cases then they would actually have to, we say uplift, whatever, but there is some additional audit work, oftentimes some additional documentation that needs to happen. So if you have audited financial statements, don't assume, oh, well, I don't have to worry about that, I'm completely done. They can just take that and put it into a public offering. That is not always the case. There's also some other considerations that the auditors need to think about and the companies need to think about at this point in time. The audit firm must be registered with the PCAOB. There's just no exceptions to that, whether it's in an IPO or not. Now, I say there's no exceptions. The acquired company financial statements and equity method investees, it is possible those don't have to be a registered firm, but the company itself, the registrant, must have a PCAOB registered firm. There are also stricter independence rules with the PCAOB and the SEC than maybe in certain underlying other auditing standards, and so you need to make sure that there's no potential independence issues in the historical financial statements. I mean, some things that are permitted, even under US audit standards, it's permitted to assist in drafting footnotes, as an example. That would be an independence violation under PCAOB rules, and had you done that in historical financial statements, you would not be considered independent, so you'd actually have to get a new auditor to come in and re-audit that. Again, something you want to know well in advance, not up at the last minute here. Unlike in certain jurisdictions, in an IPO, for example, I know in Hong Kong, the audit firm does not need to be a US firm, and very frequently it is not. So any firm that is registered with the PCAOB can issue an opinion on audited financial statements in a US filing. The only thing is the individual partner has to be licensed in their own jurisdiction. They do not need to be a US CPA either. So there is some actual leeway in that. So you do very frequently see non-US firms signing opinions in registration statements and on an ongoing basis. So again, the financial statements requirements, I think were covered a little bit here. I just want to note a couple things here. One, EGC is the emerging growth company that I mentioned. The SRC there is a smaller reporting company. That is a classification of companies, but only if they use domestic forms and use US GAAP. So you don't see very many foreign private issuers that choose SRC status, but occasionally I've seen companies do it because the rules, not necessarily in an IPO, but because the rules in the follow-on of how quickly you need to include the auditor's attestation on your internal controls is different if you're a smaller reporting company. So I have seen companies choose to do that, but generally not. The age of financial statements was mentioned briefly. So generally in a filing, the financial statements must be current in that they meet the age of financial statements when they're filed for the SEC to review them, and then they must meet the age of financial statement requirements when the company goes effective. And when you go effective, it's actually a process that the SEC, and until very recently, they were manually written as effectiveness notices. Now they're electronic, like everything else. But when they actually declare the company effective, and that's kind of talked about the process a little bit, but when they've cleared all the comments, the company requests effectiveness, and then the SEC permits them to go effective. Usually that happens, in an IPO world simultaneously with the deal being sold as well, and the underwriter's agreement being signed and things like that. But what I was saying on the age of financial statements, so you have annual financial statements that can be no older than 9 months in a document without having to put interim financial statements in there. If you are a foreign private issuer, typically you are going to use 6-month accounts. You're not required to do quarterly financial reporting if you're a foreign private issuer. If you're a domestic registrant, you do. Now, sometimes investment bankers, underwriters want quarterly information, particularly if you're in the third quarter and you're after that, because to get more current information, if it's, if the company has a good trend, they may want to show that because it'll help potentially market the company, but you're only required to have interim accounts through 6 months. Now, there is a quirk, and that was mentioned earlier, with foreign private issuers in that, in theory, when they go effective, the financial statements can't be any older than 12 months. So if you were a calendar year-end company and you went effective in January, in theory, you have to have that most recent year's audited financial statements. Now, in practice, no one does that because you can't, and that's the dispensation that was mentioned earlier that you need to get from the staff to be able to use those, and usually you can get that for sometimes the full 90 days, sometimes a little less, it just depends. But generally speaking, you want to have financial statements that are no more than 3 months after year end, and interim financial statements have to be anytime you get past 9 months, you have to have those in there. And I say that because, again, you think, okay, well, I've got the audited financial statements, I'm done, but then depending on how long the review process takes, you either have to be prepared to get the next year's audited financials, or you also have to be prepared to have the interim financial statements. The interim financial statements are not audited, but they are reviewed by your accountant. So they still go through the process. They still have to have footnotes, but they're abbreviated footnotes. They don't have to be the full footnotes that you'd otherwise have. We said, the 2 years, just do remember that after a company goes public as a foreign private issuer, then they have to report the 3rd year. So it's only the accommodation in the registration statement that allows you 2 years. After that, you have 3 years P&L, 3 years of statement of changes and cash flows. So it's just, again, a formatting to keep it. At that point in time, it's not additional cost because you already have it audited. You already had it in your registration statement. So let's talk a minute about internal controls over financial reporting. An area that everybody loves to talk about, whether you call it SOX reporting, whether you call it internal control reporting, ICFR reporting. It is something that all U.S. public companies are required to do after they have gone public. The registration statement itself does not need to contain either management's attestation on internal controls or the auditor's attestation on internal controls. However, in my general theme of be prepared here, you do want to have considered the controls and be ready to be in a position to opine on your controls in the future, because again, you don't want to go public and have the first time management has to report on internal controls, report a material weakness. It is, and that you have not told the market about in your registration statement. You don't want to be in that position. So you want to have the controls in place. Now, as I said, there isn't a requirement for either management or the auditors to include an ICFR opinion in the registration statement, but if in the course of doing the audit or in the course of the company preparing the financial statements, they determine that they have a material weakness, that does have to be disclosed. You can't ignore it if you know about it, but you don't have to have an opinion on it. Management, again, would be required to include their assessment of internal controls in their second annual filing. So the first annual filing, whether it be a 20F or a 10K, again, a foreign private issuer, a 20F, does not need to include management's attestation on internal controls or the auditors. The first one after that, so in essence the second, does need to include management's attestation, and whether the auditor's attestation is required depends on whether the company still qualifies as an emerging growth company or whether they have lost that status. For the most part, companies can retain their emerging growth company status for 5 years, no longer than 5 years, but the maximum is 5 years. However, if they meet certain thresholds, then they lose that emerging growth company status. Either if their revenue goes over, it's a little over $1 billion because it's inflation adjusted, so it's $1 billion something, but somewhere in that range. Or they become a large accelerated filer, which is another category that the SEC looks at, and the accelerated filer and large accelerated filer status for a foreign private issuer is based on your market capitalization, and it's your worldwide market capitalization. Again, usually that is something you want your counsel to assist in determining what exactly falls into that determination of worldwide market cap. But if you get over 700 million in market capitalization, then you will lose your emerging growth company status because you become a large accelerated filer, in which case you would then have to have your auditor to include a report on internal controls. But even if you go public, wildly successful, 700 plus million, the first year nobody has to have the internal control report in there. So, you know, again, that's why I'm saying preparation is really important, because that is a time-consuming process. Depending on how well your controls are currently documented will determine how much work you have to do. I would say that the majority of companies that I see when they have to report internal controls for the first time use a consultant to assist them. Consultants all across the board, different types, sizes, etc. But I've seen pretty much everybody uses a consultant to help them at least get the initial controls well documented. And again, the control process itself is a risk-based approach. So the more significant the control is, the more documentation and formality needs to be around that control. So for example, if you have a control that someone is reviewing the percentage of completion in a revenue calculation, or a goodwill and or intangible asset impairment calculation, those are going to require a lot more documentation than perhaps the controls over bank reconciliations, which again, don't require necessarily as much thought and judgment into what that control is involved. Okay, some areas that the SEC staff might focus on when they are reviewing financial statements. So when you file a registration statement, it has been said, the SEC staff will review it. They look at every IPO document, and they have 30 days to get comments back to you. And unlike their periodic reviews, which they will do for companies on an ongoing basis, for an IPO, pretty much they review it cover to cover. They will look at kind of every disclosure, every page of that filing, and you're subject to getting comments on every page of that filing. Again, from an accountant's perspective, our objective, no comments, or very, very few comments that are easy to fix. And so to do that, you want to think about, well, what are some of the most common areas where we do see comments? Where does the staff tend to focus when they're reviewing a document? So these are some of the kind of key areas, and a lot of these go across industries. They are accounting framework agnostic. Doesn't matter whether US GAAP, IFRS, they're still going to look at these. So a couple of things that are important. If you have issued any form of equity prior to going public, the SEC staff will be very interested in how that equity was priced compared to your IPO price. It's a concept called cheap stock. In other words, you cannot give insiders stock at a price a lot less than what the IPO price is unless you're going to book compensation expense for that. And in most cases, companies are not booking compensation expense. They're giving options at market, whatever that is for an unlisted company. And then if it's dramatically different, the staff will want to understand, well, you know, what happened in that intervening period. It might be that very specific things did happen in that intervening period, but you have to be able to prove that. Likewise, if you are doing a de-SPAC transaction, there are a number of accounting issues related to the warrants that the SPAC shareholders will often have, and sometimes it's the insiders that have them, and the classification as to whether they are equity or debt. That is also the case with companies that have received private equity funding, because oftentimes that private equity funding will have different terms to it. It can be convertible preferred, it could be convertible debt, it could have debt and warrants, stock and warrants. All of those tend to add complexity to the financial statements, and are areas, again, that you want to make sure you have addressed very early in the process. And whether you, again, need a consultant to assist that sees a lot of these type transactions, because they do have complexity. The SEC staff will have their views on how these should be accounted for. Again, it doesn't matter whether it's IFRS or US GAAP. In some cases, their views, again, are accounting agnostic. So you just want to be aware that those are some of the key areas. Revenue recognition, if you have revenue, a lot of IPO companies may be in the, particularly biopharma type companies, may be in the pre-revenue stage still, but if you have revenues, that is an area the staff will focus on, because it's an area typically investors will also focus on if you have revenues, because that's what you're generally buying into. So particularly very clear on the disclosures related to the revenues, what triggers revenue, is it over time, point in time, the various aspects of IFRS 15 or ASC 606. Fair value measurements, the same thing. I hit on those with some of the complex financial instruments. But again, the valuation of those and what drives that value. What are the key inputs into the valuation model? Is it the discount rate? Is it the growth rate? Whatever it is, that should be very clear from someone looking at your financial statements. Segments is like the ever-present SEC comment, and it is very particularly important in an IPO document because when you're thinking about a company, the segments is dividing that company up into the different ways of reviewing it. And it depends on how management looks at the company. Sometimes that's geographical, sometimes it's product line based, sometimes it's based on different companies. There's a lot of different ways you can look at a company, but the SEC staff will generally be highly skeptical of companies that say they are in one segment and that they seem to have in their discussions either in the front part of the document or otherwise it implies that perhaps there's more than one business line, and then the company, how is management compensated? Well, they're compensated for this, and that could lead to potentially being a different segment there. So that's something that oftentimes the investment bankers and lawyers are very heavily involved with early in the process to understand how you're going to describe the business in the rest of the document, because this is kind of for the financial statements, but that carries forward into your S1 or F1 registration statement of how you're describing the business. I already mentioned liability or equity classification for financial instruments. The last one, the use of non-GAAP metrics or non-IFRS metrics, depending on if you want to be generic with GAAP or IFRS, is absolutely another area that the staff always looks at. Typically, and I will explain why not always now, typically non-GAAP metrics are not included in the financial statements, but they are outside the financial statements. And the staff will ask a number of questions. Often they're in the management's discussion and analysis section. So that is often where you see these questions come up about non-GAAP metrics. The interesting thing that is just going to start coming into play in the near-ish future is that IFRS has recently issued IFRS 18, which is the International Accounting Standards Board has recently issued IFRS 18, which is the basis of presentation. And in it, it requires management performance metrics, or MPMs, to be included in the audited financial statements. These are, by definition, non-GAAP, non-IFRS metrics. So it'll be interesting to see how the convergence of the new IFRS standard and the SEC's rules and guidelines ultimately come together and what they permit to be included in the financial statements. Since IFRS requires the inclusion, the SEC will allow it. It's just, again, like how much they will question about whether it meets the definition of a management performance metric, et cetera, or whether it looks like companies are trying to get in some other types of non-GAAP metrics that maybe don't meet the MPM requirements. So, but it is, that in and of itself is a key issue. And also, as I said, it'll be interesting to see how the two sort of come together there. They have objected to the FASB's guidance on segments, including a second non-GAAP metric. So we'll see what they do. So kind of the last area just to talk a minute about is the auditor's role themselves. I've talked, a lot of the financial statement information is kind of important from all accountants' perspective. The auditor's role, as I've kind of alluded to, I mean, absolutely critical. You cannot go forward without a signed audit opinion. And it has to be a clean opinion, with the exception of going concern, which you see sometimes even in IPO documents in biotechs and startups. But for the most part, it cannot be any sort of a qualified audit opinion. It has to be a clean opinion, which again, getting back to some of the preparation, if you're a manufacturing company and you have inventory and you've never been audited, then you might have to have a period of time for the inventory audit procedures to be performed, things like that. So it does have to be a clean opinion. There's essentially no exceptions that the SEC will accept, as I said, except for going concern. And you also need to think about, from an auditor's perspective, I mentioned in some cases an auditor might not have been independent, so you might have a different auditor. If you have more than one auditor involved in the registration statement for the 2 years, or if it doesn't qualify, the 3 years, then you need to have opinions from both of them, because all the years need to be covered. And it's just coordination exercise in making sure everybody's on the same page and everybody's doing the timely, getting their opinions ready and they're ready to issue them, et cetera. But essentially, our main role is to make sure that the financial statements are compliant with SEC criteria. They comply with the underlying accounting framework. They're done on a timely basis, and that, you know, we don't hold anything up in the whole process. We're ready to issue, unless it's appropriate to hold it up. I'll put it that way. We try not to, but if something's not done or disclosures aren't made, obviously we can't issue an opinion. We don't draft financial statements. We cannot respond to the SEC on the comments that they give. We can help the company, but from an independence perspective, we actually can't do that. The other fairly important thing that we do is that we ultimately, as part of the process of going public, we will need to issue a comfort letter to the investment bankers. So as part of their due diligence work, they will ask for a comfort letter from the auditors. And it's a very particular form of a letter. It takes the registration statement, circles certain numbers. We provide comfort or tick marks on those particular numbers. And the importance of that is that, again, it's a time-consuming exercise on both our part and management's part. They have to get us all the support so that we can then tick mark the individual numbers if we don't have it in our audit support. So again, why that process needs to happen as early, at least from a draft perspective, that the underwriters get a draft of our letter so they know what we're going to say, so that we get a draft of what they're going to want comfort on so we can say what we can and can't comfort. It's just important to get that done on a very timely basis there. Oops, let me go back. Okay, sorry. There we go. Appendix. I just wanted to highlight a few things I'm not going to cover in detail. There is the definition of a foreign private issuer legal, but I know that was covered. I have that in there as well. I also have the definition of an emerging growth company, which is a little more quantitative. We can usually figure that out, but it's always nice to make sure everyone agrees onto it. I also have in here, just kind of quickly, a draft timeline. Again, a lot of things can determine whether that timeline moves as quickly as planned. Most importantly is how ready is the company. And that readiness can be both from a financial statement perspective, it can be from having their corporate documents in place and how early they've worked with their counsel to make sure they have their corporate documents all in place. It can be, do they have the right people in place? Because sometimes who they have in the company might not be the right people needed in a public company that has to report on a much more timely basis. They may need to add people to their accounting staff, or they may need to work with outside counsel or outside advisors to make sure that they have all that in place. But again, just sort of a general time frame there. And then lastly, just a little bit about BDO that you can all read at your leisure. Both BDO worldwide, BDO here in Korea, and BDO in the US. So with that, I want to thank everyone, and I will turn it over to the next speaker.
Thank you, Ms. Hambledon. Just before we go to the next session, I would like to also introduce one of the BDO partner in US by the name of Stanley G. Stanley. He's the principal in audit, so I'm sure that he's will be around to address any questions if you need. Okay, thank you, Stanley. Our next speaker, and I'd just like to have and ask the crowd give him a bit of extra applause because he's waited very, very long time to give his presentation. So over to you, John, and hope you enjoy your presentation.
Thank you very much. 안녕하세요. 제 이름은 이재훈입니다. 오늘 여러분들을 만나게 되어서 반갑습니다. 죄송합니다만 미국에서 태어나서 한국말이 서툴어서 영어로 하도록 하겠습니다. 감사합니다. I almost didn't attempt to do that after hearing David, but I had to give it a try. Everyone, it's a pleasure to meet you guys. My name is John Yee. I am a managing director at Gateway Group. We are a full-service investor relations and public relations firm based in Newport Beach, California. Gateway as a whole has been in business for over 26 years, working with emerging growth or microcap or small cap companies across sectors. So we help clients build brands, tell their story, and navigate the capital markets. I think that's a little messed up, but in terms of our experience, we have had a lot of experience working with Asian companies. We're based in the US, but have worked with a couple of Korean companies in Double Down and Capdivision, and have a pretty robust Singapore and Japan practice. So what is investor relations? So investor relations is the gateway, quote unquote, for transparent communications for anyone that deals with a company, whether that be investors, stakeholders, employees, or shareholders. And it's a very pivotal practice or a program that every company needs to install in order to succeed in the capital markets. In terms of the recipes for success, or let's just go a layer deeper for a successful IR campaign. In terms of the audience, who do we necessarily interact with? Obviously, the clients are the companies, the CEOs and the CFOs, but on the other side are investors, institutional and retail investors, and analysts. So these are the people that you guys as a publicly traded company will interface with, interact with, and obviously tell your story to. The main objective for IR is really to break down the narrative, the corporate narrative, into bite-sized pieces for investors, analysts, and shareholders to digest, because most corporate stories aren't the easiest to understand right off the bat. And again, we work with so many good companies, great operators, great CEOs, but they're not the best storytellers. So we are consultants that help break that down and ensure that the company is speaking the same language as investors. So what exactly is being spoken? The content and communications, right? Financial data, earnings report, investor presentations, and any other collateral that is investor-facing or public-facing. Our team will work with the CEO, the CFO, to ensure that everything is online, on brand, and A-plus material to go. In terms of the regulatory requirements, we work pretty hand-in-hand with the law firms, SEC counsel, to ensure that the company is within the guardrails of the SEC regulations and isn't breaking any regulation, fair disclosure, or Reg FD. That basically means the company is not allowed to share any MNPI or material non-public information, because as a public company, you're under the microscope of the SEC, whereas you're not for a private company. And metrics of success, it's capital markets awareness, investor engagement, analyst coverage, and the accuracy of financial communications. So this is a slide that I wanted to emphasize, and it's the importance of corporate communications. So as a company, you need to be able to tell your story to the right audience, whether it be on the investor relations side or the public relations side. On the IR side, your main audience are the investors, buy-side guys, analysts, whereas for the public relations side of things, it's media, consumer, and employees. We call it the left hand and the right hand, and they need to be able to be on the same page, or else the company doesn't look cohesive and isn't telling the right equity story. So what exactly does investor relations do in the pre-IPO landscape? We kind of bucket it here into a couple of phases. The first one is strategy development. Our team gets on a call with the management team once we are engaged. We'll help align on the strategy. What's the timeline? Who are the bankers? Who are the accountants? Who's the law firm? So we want to ensure that we're on the same page and have a strategy for the broader IPO timeline. And we'll help by start building the business description, because again, the company knows what they're doing from an operational standpoint, but how are they telling that story to the public? We help with that process. And that kind of bleeds into the second phase, which is profile raising and preparation. presumably there are going to be companies of yours that are in the same ecosystem, your competitors, quote unquote, that are already publicly traded. So as an IR firm, it's our job to see, who are those other competitors out there? How do they present their story? What are the KPIs that they're telling? So we want to ensure that you're telling your story in the right manner, in the best possible manner, so to speak, possible, and then we'll help create some of the collateral materials, namely the investor deck, the one sheet. The investor deck is going to be the most important piece of information that you need to work on as a company, because that is what the CEO, the CFO, whoever the spokesperson is for the company is going to be walking investors through during the roadshow process, which is what the bankers will typically help facilitate. And social media is another element where I will go deeper into a little bit later, but in this social media prevalent environment, everyone, investors, retail, institutional, they're all looking at social media. What does the company do? How do they disseminate news? What are some updates that they provided to the public? It's an absolute vital part of the go public process. And shifting gears to the third phase, in terms of IPO liftoff, once all the collateral materials are finalized, the deck is good to go, the one sheet's good to go, we're going to start the roadshow rehearsal or the mock pitch process. Now, again, our goal is as consultants to help you as the management team tell the best story possible. We want you to be ready for game time, which is the roadshow process in advance of an IPO. So our team will hop on a call and have several mock pitches with the clients. We will play the investor role, you guys will play the spokesperson for the company, and we want to ensure that you are telling the best story, and we'll even throw questions out there because investors are savvy individuals. They look at the numbers, they know what questions to ask, and we know what questions they're going to be asking you. So we want to ensure that you guys are as well equipped and well prepared as possible. And once that's finalized, we want to ensure everything else from an IR infrastructure standpoint, namely the investor relations website, is finalized, ready to go prior to the D-Day timeframe. And looking on ahead, a key point to note is from an IR standpoint, a lot of what we do is heavily emphasized in the post-IPO window. There is a fair amount of work that's done in the pre-IPO phase, as you can see, but post-IPO is really when investor relations is fully activated because your stock's publicly traded. It doesn't stop. It's open when the market's open, and that's really when IR is a pivotal play, and I'll talk a little bit more about that in the next slide. And finally, it's being public. So these wonderful people here, the Avengers, as I call them, are going to be helping you throughout the entire process of going public. And once your stock is priced, it closes, boom, you're off to the races, and you're a publicly traded company. So that's really how we think about it and how we're helpful in the pre-IPO landscape. So what is the role of IR in the post-IPO phase? We kind of bucket it into 4 different segments: consulting, communication, outreach, and reporting. So from a consulting standpoint, presumably a lot of the individuals here, given the Korean ecosystem, have not been Nasdaq or NYSE CEOs or CFOs before. We want to be the partner right next to you to kind of coach you, walk you through what you should be doing in the capital markets. The capital markets is a daunting game once you're public. There's a lot of work, like everyone's discussed, in the pre-IPO phase, but once you're public, that's some will say it's really when the game begins, because again, your stock's liquid, people are trading your stock, and everyone has eyeballs on your story. So we help from a consulting standpoint by helping with corporate positioning, perception studies, M&A communication strategies if applicable, capital formation, and crisis comms, and other strategic counsel. Moving on, the communications bucket is very, very important. And the investor presentation and the investor website are 2, we call it living documents. As your business progresses, as you grow, as you have new milestones, as you double your revenues next quarter, your investor presentation and your corporate narrative is going to shift. So those are documents, and the presentation and the website are things that we monitor and help by ensuring that the public is fully apprised of what you are up to as a company. What did you do well? What is going on now? And what's exciting? What's the future looking like? And that's all going to be told in the investor presentation, presumably, and then the website as well. Press releases, that's the main medium of communication that companies use to disseminate news, to educate the folks and alert folks of certain announcements, partnerships, wins. So we draft and work with the management team to, again, craft that equity story. And earnings calls. Every publicly traded company has to report earnings. FPIs typically report twice. We will help with the earnings call process. So once the filings are all ready, once the financials are fully baked, we will sit on a call with the management team and kind of figure out what's what kind of story do we want to tell the public? How do we want to frame ourselves given what's already, what's live in terms of financials? So that's something that we help out with. And moving on, in terms of outreach, this is one area that is absolutely vital for a publicly traded company in the microcap and small cap ecosystem. Just because you're public doesn't mean everyone's going to be flocking towards your stock and you're the next Amazon or the next Tesla. That's typically not the case unless you're a unicorn. But outreach is a very pivotal component of IR because you want to get your story out there to the right institutional investors. And that's something that our firm specializes in targeting the right sell-side equity research analysts, targeting the right hedge fund, the right mutual fund. And one thing that our firm has that other IR firms don't is an investor conference. We actually just had a very successful event at the Four Seasons Hotel in San Francisco. And it's a conference, it's a marketing event for companies to be able to market their stock, tell investors about their story, and to basically evangelize their corporate story into Wall Street. And then finally, reporting. So what are shareholders doing? Who's buying your stock? Who's filing the 13Gs, the 13Fs? And investor marketing feedback and perceptions. The benefit of working with a third party like us is investors are very candid. Typically, they won't tell the CEO up front, hey, this sucks, this isn't great, but then they'll be very candid with us. And we can garner that feedback and help fold and shape the corporate narrative accordingly if the investor thinks this is good, this is bad. It's very good feedback and very good information for management teams to digest. In terms of the corporate and IR website, this is something that our firm offers to a lot of our clients because the IR website is something that typically isn't known to be had until kind of later in the game as you approach the IPO timeframe, but an IR website is very necessary in addition to a corporate site. And I mentioned corporate site because as someone who's worked with several foreign private issuers, it's sometimes hard to find a certain company on Google. And investors in the US are always going to Google ABC company, XYZ company. But if you're not being searched from an SEO standpoint and your corporate website isn't available, it's kind of a turnoff for investors. So it's absolutely vital that you have a very tier 1, A+ corporate website and an investor relations website. And the IR site is a sub-tab within the corporate website that a lot of investors are trained to go to because there's all the sub-tabs within the IR site that is necessary for companies to include, such as disclosures, press releases, all that stuff. So that's something that we help kind of navigate you guys through. Yep. In regards to social media, like I mentioned, given the environment that we're currently in, social media is extremely vital. We hear investor feedback all the time if a company doesn't update its social media on a regular basis. Because again, if I'm going to search an ABC company on LinkedIn and they haven't posted in the past 3 years, it's going to raise an eyebrow. I'm going to be a little bit confused and question why aren't they so active in the social media landscape. So especially as a foreign private issuer, given that your business isn't necessarily in the US at all times, it's very important to have a social media presence at the very least. So this is an interesting slide that I really wanted to kind of hone in on. So some insights into the US IPO markets, given our experience. First on the left side, what investors look for in foreign private issuers. They look for industry leaders with strong market share or unique advantages. They want to know, this is actually a really important point, currently operating or plans to expand operations into the US. Not to deter anyone away, but I would strongly recommend having a definitive plan to expand or already have a presence in the States if you intend to list in the US. That is by far the #1 feedback that we get from investors if a company that is Nasdaq listed, NYSE listed, but they're based in Singapore. Sometimes raises an eyebrow, but it's one of the main points because investors want to touch, taste, feel, see, smell your product or service. Net income positive, this is still somewhat of a trend. It's ideal to have net income positive bottom line or clear path towards profitability. And a strong management team. This is another point I really want to emphasize because I've been on client calls where there's no English-speaking individual from the C-suite. And that 30-minute call ends up being an hour. And you can imagine investors aren't the most patient individuals. So as a result, it's absolutely pivotal to have a spokesperson, whether it's the VP of finance, whether it's the COO. It doesn't have to always be the CEO or the CFO, but someone with public company experience that can actually speak fluent English is going to be absolutely important in actually echoing and evangelizing your story to investors. Lastly, reporting financials on a quarterly basis rather than a biannual basis. This is just another piece of feedback that we get from investors because They want to know what's happening in your business, right? And foreign private issuers typically will report earnings twice a year versus domestic filers, which are 4 times a year. And moving to the right, these are some FAQs that investors ask. So why is the company going public now? Why go public in the US when operations are mainly in Asia? What was the reasoning behind going public in the US markets? Is any part of your workforce in the US? Why should I invest my capital now? Which companies are considered your competitors here in the US? And how will an IPO accelerate the company's overarching corporate goals? So these are some FAQs that we typically hear from investors. Lastly, we offer a complimentary consultation. I have a little booth back there, and I'll be around for the next hour or two after we conclude here. So I'd love to speak and meet with anyone if you guys have any questions. But thank you so much for the time. 감사합니다.
Thank you, John. It's quite a comprehensive presentation. Thank you very much. Next is Ms. Inez Chu. May I ask audience to give her the real round of applause. Thank you very much. Okay, over to you.
Thank you very much. Hi, everyone. Thank you for making it till the end of the afternoon. Okay, before I begin, I just want to say a big thank you to Thomas of CBA Partners, Kano-san of HeartCore Enterprises, as well as the rest of the organizing committee for today's session. It's an honor to be here, so thank you for having me. My name is Ines Chu, and sorry. Yep, so my name is Ines Chu, and I'm the Director of Active Disclosure at Donnelly Financial Solutions. In short, we call ourselves DFIN, DFIN, which is also our ticker on the New York Stock Exchange. So earlier today, you've met counsels, you've met bankers, you've met auditors, IR, and now with me, you've met filing agent, also known as a financial printer. So for those of you who are new to the IPO space, you'll probably be wondering, what exactly is a filing agent or financial printer? And why do I need one for my IPO? So let me break it down for you. So let me break it down for you. So first of all, a filing agent would be responsible for ensuring that all critical legal and financial paperwork for your IPO is accurate, it looks professional, it's formatted correctly, and is submitted to your regulators and your investors on time. Okay. So our scope of work includes the creation, the formatting, and the submission of all your regulatory filings. At the pre-IPO stage, we're looking at the DRS as well as the F1. And at the post-IPO stage, we're looking at 20F, which is your annual report, 6K press releases, and all your other disclosure documents. And if you require the document to be presented in multiple languages, we will also be handling the translation services. And after submission, we will handle the printing and the distribution. Okay, so your next question would probably be, then how do I select a filing agent for me? Right, so first and foremost, look for a filing agent that has worked with Korean companies on their US IPOs. Because this would mean that these companies understand the unique dynamics of Korean corporate and reporting practices. Right, we're talking about specific accounting standards, corporate practice, corporate structures, regulatory filings, and the nuances and be able to translate all of these into US regulatory frameworks. Next, it's also important to look for one that upholds security and confidentiality, because the information handled during the IPO process is highly confidential. So it's very important that you work with a filing agent that has a good reputation. There's some out there that have been caught for mishandling of information or insider trading, so do stay clear of such companies. Next would be technological capability. Does the filing agent that you work with have the advanced tools and solutions to help handle your IPO process in a more efficient and accurate and timeless way, right? Because this is really important. With the technological edge, it will make a huge difference in your IPO experience. And last but not least, work with a company that has global network support. Because your members of the working group will likely be made up of people from different geographical locations. So it's important to work with a company that also supports you across multiple geographical locations. Okay, so now you understand more about who we are, what we do. It's time for me to introduce our company, DFIN. So DFIN stands for Donnelly Financial Solutions. Okay, and we're the leading filing agent for US IPOs, not just in Korea, but all around the world as well. We have been around for about 160 years, and in Korea, we've been doing business for about 30 over years now. Okay, my colleague, Ms. Jung-Yun Moon, she has been our country manager of Korea for over 20 years, so you can trust that she knows everything related to US IPOs in Korea. As you can see on screen, these are just some of the Korean companies that we work with. Webtoon, Shinhan, Capco, KT, POSCO, Worry, KBN, even more that are not on screen at the moment. Okay. In addition to Korea, we do support clients all around the world. And this is just a snapshot of some of our clients' IPO milestones. So this is exactly where DFIN sits. We're the central point of contact that, between the issuers, the counsels, the bankers, and the auditors. So when the working group comes together to draft the document, we will be the ones responsible for ensuring that the document is formatted correctly and is ready for the regulators. So how exactly do we then support you on your IPO? Right, so we'll break down into 4 key milestones: preparation, pre-filing, initial submission of F1, and live post-IPO. So for a start, preparation would be about 12 to 18 months, sometimes even more than that. Okay, so during this phase, it's all about IPO readiness. And during the process, you're likely to be asked to share an extensive amount of data, sensitive company data, with external parties for due diligence and for fundraising. And it often makes companies very nervous when they're told to share that information. Well, rightfully so, because of cybersecurity concerns and data privacy laws like GDPR. In the case of Korea, you have PIPA. But there are very secure ways they can share such information. I'm not talking about just your Google Drive, your Dropbox, right? Those are very generic. I'm talking about technologies that were specially built for you to share sensitive information. And these are what we call virtual data rooms. At DFIN, we do offer a virtual data room called Venue. And Venue is constantly aligned with the cybersecurity standards all around the world. Right? It also has amazing features like being able to customize each and every person's user's privileges. Each and every person that's working on your files, you're able to see all the activity that's going on. And you can also have automatic redaction on personal information. Okay, so this makes it a really secure channel for you to share information with external parties. And at this stage, you would also be building up your ERP systems, right, to ensure that you have integrated and reliable data and systems required as a public company. Right, this would be needed for financial reporting, for regulatory compliance, and for operational efficiency. So DFIN, together with the rest of our partners, can engage and support you in those conversations as well. Next would be pre-filing. So this is the time that you start preparing your draft registration statement. And this is where you start telling your business story, your risk factors, your audited financials, and all other disclosures required by the SEC. And as an issuer, you have 2 options of how you want to draft this document. Right? Option 1 is what we call a traditional full service, and option 2 is software. So most filing agents out there would offer you either option 1 or option 2, but at DFIN, we'd like to offer you both. Okay. So for option 1, the traditional full service, during this process, you would engage DFIN by outsourcing the entire work to us. So we would take care of all the technical elements like the formatting, the ADGA conversion, making every run of change on your behalf, and right down to the submission. This option provides you with strong compliance oversight, but at the same time, because every round of revision has to come through us, it tends to slow down the process. And you would also end up with multiple versions of a single document. So that brings me to my next point, which is option 2, software. At DFIN, we do have an IPO drafting software, which we call Active Disclosure. And this was built in partnership with Microsoft. So even Microsoft themselves are using this for their SEC filings. So clients on active disclosure can allow both their internal and their external working groups to come together to collaborate on their prospectus in real time without having to worry about version control because the system takes care of it for them. Right? And the software also offers instant Excel conversion, and it allows you to sync up your Word and Excel files with your prospectus. So if you were to use an active disclosure and you had made a bunch of changes on your Excel spreadsheet, you do not need to copy and paste them onto active disclosure. Okay? All you need to do is sync up your documents, and all the changes that you have made on your Excel will be instantly reflected on your prospectus. And I'm not just talking about the tables being updated, but right down to the figures in the text as well. So if you had numbers in the text that relate back to the tables, those numbers in the text would also be automatically updated. So this becomes a really efficient, really accurate process during your IPO journey. Okay? Next would be initial submission of F1. So after you have received and responded to the SEC, next would be your public submission, right? And at this time, your investors and your competitors can start reading your disclosure document. And this is also when the market starts paying attention to you. So it is more crucial than ever to ensure that your filings during this stage continue to be timely and accurate. And if you were to be using software like Active Disclosure, right, it can help you shorten the time to market because it provides you more efficiency in the process so you can more quickly move on to the next stage, which is going public. So you've hit the button to go public, you've rung the bell, you have had your champagne, and now reality sets in, right? So at the post-IPO stage, you would find yourself having to deal with annual reports, quarterly reports, board reports, investor presentations, earnings call strip, and so on and so forth. And it can be very overwhelming to manage. But the good news is, if you have a software like Active Disclosure, you can have them all housed on a singular platform. So when you make a change to a single document and you want your information to be consistent across all your other documents, right, Active Disclosure will take care of it for you. It would ensure that all your documents are universally updated. And very soon, we'll also be rolling out an AI capability that will allow you to take your document and compare it against your peers. So what comes back to you would be a report on the similarities, the differences, and some suggestions to help you improve and stand out against your peers. So Active Disclosure is not just a software for the pre-IPO stage, but at the post-IPO stage as well. And don't just take my word for it, right? Just look at some of the logos that we have on screen, some reputable names in the market. So they are all trusting DFIN and trusting Active Disclosure for their SEC filings. Okay, so when you do work with DFIN, regardless of which option you decide on, whether it's our traditional full service or our software Active Disclosure, we will provide that hand-holding support to guide you along every step of your IPO journey. And our role would remain the same. We just want to ensure that we offer you timely, accurate, and seamless SEC filings. Okay, so this is the foundation that we offer and the commitment that we make to you, so you can focus on telling your business story to the rest of the world. All right, that's it from me. So if you have any other questions, feel free to reach out to me later on, or my colleagues available today. Thank you.
Thank you, Ines. We'll now take a short 10-minute intermission. Please return promptly for our final panel discussion at 5:30 p.m. So we'll have about 10-minute intermission. Thank you. To get the momentum going in terms of Q&A, I'll begin with a few questions to our panelists, and then we'll open the floor for audience questions. So please raise your hand, and our staff will find you, and the staff will deliver the mic for you. Okay? So let me start with this question, which is very simple and straightforward to all panelists. In your experience, what is the single most important readiness factor for the successful Nasdaq IPO? Okay, so very simple question. Answers, please. Raise your hand. I think this question was supposed to be answered by, okay, Mr. Dechampagne.
Sorry, I'm going to pass it back to you, Wendy, but I think the company has to be ready. The financial statements have to be ready. There must be some sort of business plan that's kind of ready. But really, the financial statements are key, I think.
I can speak in English or Korean. 그 성공적인 IPO를 위해서는 아무래도 그 회사의 어떤 펀더멘털 비즈니스에 대한 그 스토리라든지 그리고 지금 방금 여기 변호사분께서 말씀하신 그 파이낸셜 스테이트먼트 오디팅 다 잘 돼 있어야 되고 그런 것이 다 잘 돼 있을 때 이제 IPO를 했을 때 투자자들을 만났을 때 그런 어떤 그 투자를 할 때 이제 설득이 가능하게끔 그런 어떤 모든 면에서 리걸 쪽이라든지 뭐 오디팅 쪽이라든지 회사 비즈니스 펀더멘털이라든지 이런 게 다 준비가 돼 있어야 성공적으로 IPO를 할 수 있다고 봅니다.
Wendy?
I would just echo kind of what has been said, but I think the important thing is that the company thinks about doing an IPO well in advance of actually doing it. So you have some runtime to think about probably all the things we've addressed here, and it's getting your documents together, it's getting your story together, it's getting your financial position together, getting your corporate documents together. It's not trying to rush the process.
Okay, thank you. Anybody else? Okay, now over to the audience. Is there any questions that you'd like to ask to our panelists? Put your hand up, please. 잠깐요. 네.
Hi. In order to do IPO, there are a lot of team and people factor to be gathered. And obviously, some of the company is very small. And what is your view? Which team is crucial to be built in-house? And what function and what strategy you think it's maybe some of you guys or is able to get outsourced?
Okay, Kano-san?
So it's most important for preparing audit. So you need to hire some accountant, or you need to hire good consulting services. Include, for example, it's, for us. So we provide several staff to help you to finalize audit with a shortened time. And also we help to create F1 S1 registration statement that is for the SEC. That page is huge. So probably you need to create more than 300 pages registration statement by English. It's a very, very huge work you need. And also important for investors relation with for the IPO. So you need to bring, ask investor to bring in your IPO. So you need to organize a team. However, it's with a small company, that's a tough work. So it's better to hire a good consulting service. That's my answer.
Can I ask one more question?
Sure, go ahead.
Sorry. I was just going to add, I think whatever you have at your company, if it's working, it probably will be working, but you have to make sure that your team is really available for the IPO. It's going to take a lot of time from them. So you may want to hire more people to perform their day-to-day functions so that the CFO, the CEO have a time to focus on the IPO.
Thank you.
Okay, next. You want another question?
Yeah,
Please.
my follow-up question is, as you may expect, a lot of companies currently in Korea, they're gonna do IPO, then there will be F1, not S1, right? It's a foreign company registered in US. Then what is the biggest difference in your view between the change or the difference between US IPO as a F1 or S1? Because Korean company listed in the US will be F1. What's
Okay.
most big
Who wants to
difference?
take over?
It's really essentially basically the same disclosure. It's organized differently for an S1. F1 has all different rules with regard to financial statements and disclosure of, for example, compensation for management. But it's essentially the same disclosure. The main difference is the financial statements. So for a Korean entity listing, whether directly or through a holding company outside the US, the F1 would be the document that you would be using.
Okay,
Mr. Shin?
thank you.
일단 저는 뭐 한국말로 대답을 하겠습니다. 일단은
네.
그 S1이나 F1이라는 여러 가지 좀 고려 사항들이 있는데요. 일단 S1으로 한다는 거는 이제 미국으로 플립해가지고 하는 뭐 하거나 이제 미국 투자를 하는 건데, 자, 한국 회사를 S1으로 옮기는 그 미국 구조로 옮기면 아무래도 저기 아까 말씀드린 것처럼 세금 문제가 제일 핵심입니다. 결국은 그 취득 시점과 그 전환 시점의 가치 차이에 대해서 그 캐피탈 게인 텍스 자본잉여세를 부과할 수밖에 없는 상황이기 때문에 세금이 많으면 어렵다는 부분이 하나고, 그걸 또 그러니까 실제로는 준비할 때는 이 외국 분들은 아무래도 S1이 이제 미국 회사니까 좀 더 빠르고요. F1은 이제 외국 회사니까 그에 대한 언더스탠딩이 필요해서 조금 느릴 수 있고, 근데 그거는 실질에서는 큰 문제가 안 되고요. 이제 한국 회사 같은 경우에는 이제 쿠팡의 경우도 그랬지만은 결국은 그 미국에서 있는 조금 더 플렉스러한 제도를 받아들이는 게 얼마나 크리티컬하냐. 결국은 이제 S1과 F1을 갖다가 이제 그 가르는 여러 가지 관점 중에서는 특히 S1은 이제 제일 꽉 와닿는 게 이제 그 듀얼 클래스로 해가지고 황금주 비슷하게 그 적은 지분으로 높은 그 지배율을 확보할 수 있다는 장점이 있지만, F1으로는 그 한국에서는 상법에 따라서 일주는 의결권 원칙이 변함없이 유지되기 때문에 사실 그런 부분들은 조금 더 다를 수가 있습니다. 뭐 또 몇 가지 말씀드리면 이제 미국 회사들로 하게 되면은 뭐 포이즌 필이나 이런 여러 가지 디펜스 메커니즘들을 자유롭게 할 수가 있고요. 한국 회사는 사실은 뭐 그런 그 메커니즘이 아직 친숙하지 않고, 또 뭐 지금 그 여러 가지 지금 상법 개정으로 인해 가지고 상당히 좀 운영이 어렵게 되는 부분들이 또 영향을 미칠 수가 있기 때문에 그 발생하는 세금과 그런 좀 편리성 중에 어느 것이 더 유리하고 더 좋은지를 회사에서는 분석하실 필요가 있지 않을까 그런 생각이 듭니다.
네, 감사합니다. Anybody else? John?
Yeah, from an investor relations perspective, I talked about it a little bit in my presentation, but as a foreign filer, you will typically report earnings twice a year versus a domestic filer, which is required 4 times a year. So investors appreciate more disclosure into the company's financials, because if you're seeing revenues, gross margins, net loss, net profit twice a year versus 4 times a year, it's ideal to have being able to see it 4 times a year, because you have more visibility into the company. There's more transparency for an S1 filer in that regard. And in terms of just being an F1 filer, I talked about it as well, but having a plan or at least a presence in the States is important as a foreign private issuer, because investors will associate FPIs or foreign private issuers with, they probably don't have any business here in the States, but it's important to be very clear and have a plan to do so, if not.
Okay, thanks, John. Okay, Wendy? Can you throw the mic?
So a couple of things, but I think the biggest question on an S1 versus an F1 is an F1, if you're a foreign private issuer, you are permitted to use IFRS instead of US GAAP. And because the relation between them. If you've never prepared US GAAP financial statements, you have to start assuming you've always done US GAAP. There's no IFRS 1 equivalent in US GAAP, so you're stuck doing it from the very beginning, which means could be 10 years, you'd have to go back to old GAAP to see. A lot of the other differences, the reporting, I mean, you're not, on an F1, you're not required to include the interim information except for 6 months, but you can always elect to do it. So you're not tied to doing it, but you can elect to do it. So there's a little more flexibility with a foreign private issuer, because you can adopt some of the things if you want to do it. If you want to give more disclosure, they're never going to tell you not to give more disclosure.
Okay, thank you. Anybody else? Okay, now over to the audience. Any questions? Please raise. Okay, please pass the mic to the gentleman on the front.
우선 오늘 여기 굉장히 좋은 말씀 많이 해주셔가지고요. 감사드리고 여기 그 패널하고 게스트 스피커분들이 영어 하시는 분이 많이 있으니까 영어로 하겠습니다. Thank you so much for your information, and it was very insightful. I guess my question is that I think that Sumita Kazang has mentioned and other people have mentioned today is that when we had a new administration in U.S., we expect that IPO market is going to be great, but it kind of, because of a lot of uncertainties at the beginning, things really didn't pick up until now, right? So we expect that it's going to be a great year. But as you know, there's obviously in U.S., there's a tariff, which is getting more formalized or be a little more clear. But obviously, there's also policy of immigration. So I guess from your perspective, how do you guys see in terms of IPO market related to your industry, and how's that going to affect for companies like thinking about doing IPOs in U.S. from Korea, from Korean companies? And the Trump, he has 3 years left. So what do you see, I think the Korean company should do going forward? In terms of what challenges that you see in the U.S. market.
Okay, Wendy? No? Okay, Pastor David. Okay, David.
Obviously, there's no right and wrong answer, right? So, your opinion.
지금 우선은 제가 아까 말씀드렸다시피 그 자료를 보시면은 2025년도 그 IPO 시장이 재작년 2023년까지 봤을 때 훨씬 더 나아졌고요. 그리고 지금 오버롤 마켓이 나아지면서 IPO를 상장을 원하는 그런 회사들도 많아졌고, 그리고 작년까지만 해도 투자자들이 IPO 마켓을 조금 피했다면은 금년에는 오버롤 마켓이 나아지고, 또 트럼프 애드미니스트레이션 말씀하셨는데 폴리시가 좀 더 훨씬 더 비즈니스 플랜들이 하면서 그런 어떤 폴리시 리스크가 많이 좀 그거에 대한 리스크가 줄여들었기 때문에 IPO에 투자를 원하는 투자자들이 훨씬 더 활발해졌고 많아졌고요. 그리고 제일 한 4, 5년 전 그때 아마 IPO 마켓이 제일 좋았는데 사례를 들으면은 지금 스펙 같은 경우도 스펙 IPO도 2020년대, 2021년대 레벨로 거의 돌아왔습니다. 그래서 그런 여러 가지 요소들을 봤을 때 스펙 IPO건 레귤러 IPO건 훨씬 더 마켓이 나아졌고, 또 지금이 아까 스미타카 씨가 말씀드렸다시피 한국과 이 미국 그 파이낸셜 마켓의 차이가 큽니다. 그래서 정말로 어떤 회사의 그런 어떤 이미지나 밸류나 그런 어떤 성장을 원하시면은 훨씬 더 US 마켓에서 투자자들을 US 투자자들을 미국에 있는 투자자들과 인터랙트 하시는 것이 훨씬 더 좋고, 자금 조달에도 훨씬 더 활발하게 활성이 될 거고, 또 내 회사가 나스닥이나 NYSE에 상장돼 있다고 하면은 훨씬 더 믿음이 가고 성장을 할 수 있는 그런 계기로 보기 때문에 여러 가지 요소로 있어서 마켓도 그렇고 어떤 회사의 스토리와 그런 어떤 성장이 있어서도 훨씬 더 US 마켓에서 리스트하는 게 낫다고 봅니다.
Anybody else?
I think what we see in practice is the markets don't like instability. So that when any of the policies, when you have a change, there's always some expectation and there's always then some instability from that. I think once the policies become more set or clearer, then the markets can accept whatever it is. And at that point in time, you'll start to see, more IPOs as we've seen in the second and third quarter of this year. We've certainly seen a lot more than we've had historically. The economy is what it is. The policies are starting to look a little more stable. And that's what I think encourages IPOs, but that's what you pay your investment bankers for too.
Exactly.
Okay, enough? Okay, to audience, any questions, please? Please raise your hand.
한국말로 해도 괜찮겠죠?
괜찮습니다. 네네.
지금 IPO를 준비를 하고 있는데 그 IPO 하기 전에 이제 신약 개발을 좀 예를 들자면 FDA에서 신약 개발을 하고 나서 이제 FDA 승인을 받을 때도 FDA 리뷰가 굉장히 그 트렌드에 따라서 많이 딜레이가 되고 우선적으로 승인이 되는 경우도 있습니다. 그래서 지금 기술도 많이 변하고 있고 이제 시장 상황도 많이 변하고 빠르게 변하고 있는데 IPO 시장에서도 이런 그 리뷰가 딜레이가 된다던가 아니면 트렌드에 따라서 이제 바뀌는 경우가 있는데 이제 이런 경우에는 어떻게 대응을 해야 되고 이제 2026년에는 어떻게 IPO 트렌드가 어떻게 될지 좀 궁금합니다.
Okay. Any takers? David?
우선은 그 바이오텍 나스닥에 지금 리스트되어 있는 컴퍼니들 중에서 바이오텍들이 많습니다. 그런 이유는 이제 그 바이오텍이 레이트 스테이지건 얼리 스테이지건 간에 그 FDA 어프로벌이 뭐 늦어지건 뭐 일찍 되건 간에 아무튼 그 이 투자자 그 미국 투자자들 컴포지션을 봤을 때 그 publicly listed 된 상장된 회사들의 그 투자가 훨씬 더 활발히 이루어지고요. 그리고 아무리 얼리 스테이지라고 하더라도 투자자들이 그 기술만 어느 정도 듀 딜리전스가 다 됐고 그 투자자들이 그 바이오텍의 기술을 믿는다면은 FDA 어프로브이 좀 늦어진다고 하더라도 투자가 잘 활발하게 이루어지고 있습니다. 그리고 제가 말씀드렸다시피 지금 2025년 추세로 봤을 때 IPO 시장 추세를 봤을 때 지금 계속 이런 추세라고 하면은 아마 2026년에는 훨씬 더 IPO 시장이 더 활발하게 이루어지지 않을까 생각하고 있습니다.
Okay, thank you, David. Any takers? Okay. Any questions from the audience? Please raise your hand. Okay, please.
Yeah, I have a question regarding the secondary sales and sale of majority shareholders when going into IPO and after the IPO. Because in Korea, I think the stock exchange and the regulators are pretty strict in terms of overseeing if the original shareholders doing secondary sales in IPO and also after IPO, they tend to regulate majority shareholders plus financial investors for the company to not sell the company shares for about like 1 year. So I was curious in the US stock market, especially Nasdaq, what's the current trend and how is the atmosphere kind of different from Korea?
Do you want to talk about that?
Sure. So yeah, the SEC looks very closely at selling shareholders. For example, they have recently pushed back on including selling shareholders in an IPO, or they have limited that amount to a smaller amount that they used to let go because they are concerned that the IPO is really to offer new shares to investors, not a way for existing controlling shareholders to sell their existing shares. So also in the US, you have lockup agreements that are imposed by the underwriters, usually 180 days. And those forbid the transfer of shares, mostly for the DNOs and majority shareholders. There are a lot of, after a certain period of time, they're free to sell, and some of them, the company will do another registration statement to register those shares. And that's the timing of that is really worked with the underwriters to see if the market is there and if that, in terms of liquidity and whether it's going to affect the IPO or the post-IPO.
제가 KRX하고 양쪽을 다 본 경험에 따르면은 일단은 미국 쪽이 훨씬 더 그 부분은 리니언트한 건 맞아요. 왜냐하면 한국은 지금 아마 뭐 바이오 회사는 뭐 3년 6개월 뭐 이 정도까지 지금 거래소에서 락업을 요구를 하고 있는 거고, 뭐 리걸리는 뭐 1년인데 실제로는 그보다 훨씬 긴 기간을 하는 거고요. 미국은 아마 I think the most longest period from the Nasdaq is the typical 180 days, right?
There's no set rule.
But yeah, it's not a regulatory driven, but it's a market driven lockup. 예, 그래서 뭐 맥시멈 본 게 한 180일 정도면 한국에서는 매우 짧은 기간들이고요. 또 한국은 그 락업 기간이 끝났다 하더라도 이걸 파는 거에 대한 또 열애 견제하고 또 여론이라는 건데, 미국은 나스닥은 그런 거는 별로 없는 것 같아요. 그리고 뭐 미국과 이제 한국의 좀 차이가, 한국은 저기 all listing principle에서 모든 증권이 다 상장이 되는데, 이제 미국은 나스닥 같은 경우에는 나중에 다 registration statement을 하고 또 추가적으로 해야 되는 프로세스가 있긴 하지만, 뭐 하여튼 그 갖고 있는 주주들이 그걸 secondary sale 하는 거에 자체에 대해서 좀 그런 여론이나 다른 몰이로 해서 좀 문제가 되는 그런 environment는 좀 작은 것 같습니다.
Okay, go ahead.
So, as you said, I think it's not in Korea as well. It's not written as a set rule, but it's like market practice. But is it similar in the U.S. where in Korea, the stock exchange, when you go IPO, you kind of have to get approval from the stock exchange, and you basically set kind of rules and say like, yes, I won't sell our shares for 1 year for a lockup period. I think that's a very common market practice. But is it similar in the U.S. where you have to kind of commit to the SEC and say, yes, we'll have a certain period of lockup and get approval for the IPO, or is it not as strict as in Korea?
It's not as strict, and it's not really a commitment to the SEC. It's a contractual obligation with the underwriters, really, where they may require lockup for DNOs and majority shareholders, and 90 days, 180 days. I've seen some deals at 360 days because they felt that it was a bit more risky, so they really wanted to lock. They also lock up the company from entering into certain transactions for a period of 6 months to a year. But it's not, again, it's not the SEC or the Nasdaq. It's really the underwriters that want to control how the shares are going to be trading in the market.
To supplement, as said, the basic difference from the Korea and US is US lockup is driven by the market, by the underwriters. But in Korea, this is actually the underwriters trying to downsized the lockup period, but the CAREX insists to make it longer. So the difference is that whether the lockup is driven by the market or the regulator, CAREX. In US, this is everything is driven by SEC, but here Korean FSS plays a very little role, and the CAREX is being active in this particular area. But I think that's how big difference is coming from both jurisdictions.
Also, in the U.S., it in certain circumstances it can be waived by the underwriters. You know, if the conditions are there and there's a legitimate reason for selling those shares. So it's all spelled out in the underwriting agreement that you enter at pricing.
이제 그 주관사 입장으로 봤을 때는 아무래도 IPO를 했는데 그 majority shareholder가 주식을 판다 그러면 저 회사 IPO 왜 가지라는 그런 궁금증이 들 수도 있거든요. 그렇기 때문에 어떤 저희 주관사 입장으로서는 물론 회사가 잘 되는 게 목표고 저 고객이 잘 되는 게 목표지만 그 잘 되는 요소 중에 하나는 투자자랑 잘 인터랙트를 해야 되고 그리고 그 투자자가 저희 고객 회사에 투자를 했을 때 리턴이 잘 나와야 돼요. 근데 만약에 그런 어떤 IPO를 했는데 바로 majority shareholder가 주식을 판다 그러면은 이제 투자자들이 좀 아무래도 꺼려 하기 때문에 저희가 그걸 아예 미리 방지하기 위해서 이제 저희랑 이제 저희가 주관사가 되면은 마켓 프랙티스로 180일에서 주로 180일에서 360일 정도 합니다. 90일 같은 경우는 이제 이미 상장된 회사가 후속 발행을 했을 때 그때는 이제 좀 락업이 조금 리니언트 해줄 수 있는데 처음 이제 IPO를 이제 막 상장하는 회사 차원에서는 저희가 좀 더 스트릭트하게 스탠다드를 좀 높이는 경우가 거의 대부분입니다. 네.
Thank you, David. Okay, I think we have just enough time for one more question, if there's a question to be asked from audience. Okay, I presume that we had enough with 4 hours of seminar. So, ladies and gentlemen, this brings us to the close of today's GoIPO Nasdaq Seminar 2025. A few important follow-up notes. Presentation materials. If you would like to receive a soft copy of today's presentations, please leave your name and contact details or your business card at the registration desk. We will share the materials after the seminar. Tomorrow, September 17, we still have some allocation. There will be a hosting of private one-on-one meeting with the HeartCore, myself, and the underwriter. Each session will be 1 hour in length and is designed specifically for companies interested in exploring Nasdaq listing opportunities. If you would like to take a part, I warmly encourage you to speak with me regarding the schedule before you leave today. This will allow us to coordinate and ensure you have the opportunity to participate in these valuable discussions. Networking. This seminar is also about building connections. Please take a few minutes after the program to exchange cards and continue conversation with our speakers and fellow participants. Finally, I'm pleased to announce that this seminar will not be a one-time event. We will continue this dialogue annually with the next GoIPO Nasdaq Seminar 2026 to be held here in Seoul. On behalf of CBA Partners and HeartCore, thank you very, very much for being with us today, and we wish you a pleasant evening and safe travels home. Thank you very much. 감사합니다. And hopefully another round of applause to the speakers, please.